Greetings, everyone. Saturday, December 24. Back from vacay. If any of you haven't been to Aruba, I urge you to run, not walk. My God, I've been going there 20 years. It's my favorite place on earth. It's got the most magnificent beaches, fabulous weather. Unlike a lot of Caribbean islands, it's reasonably arid and dry. It's not humid. The restaurants are fabulous. It's a safe place. You can go anywhere. People are really nice. It's just paradise. It really is. So we're back. And, my partner always says that when I go to Aruba, things happen in markets. This time was no different. Tommy Thornton, I'm trying to get you up here. Please accept. There you go. And so, of course, the day I traveled to Aruba, Thursday the 15th, all hell's breaking loose in markets. Vacation was supposed to start 4 p.m. on Wednesday the 14th, but not to be. So I was doing some serious multitasking, trying to trade from the beach, and we had a highly satisfactory run the last couple of weeks. I'm getting kind of actually worried right now because everyone's saying really nice things about me on Twitter. It's probably a good sell signal. It's just Short George. Just as a month or two ago, people were dumping on me, and that just redoubled my resolve. That was a great buy signal. So I try to fade myself and fade the crowd. We'll talk about Nope later. I really don't want to talk much about Nope, as you know. I try to stay away from that in these rooms. What's special about December 24th? Today is Jim Chanos' birthday. I invited him to come to the room, but he's busy. And what's special about December 25th, aside from it being Christmas? Well, it happens to be my birthday, believe it or not. So, as many of you are aware, I don't celebrate Christmas. I happen to be Jewish. But I wish all my friends the best and happy holidays. So we're going to do something a little bit different. I know you guys think I'm totally wacko, but no, or half wacko. I'm not totally wacko. So I took the liberty of, I took a poem. 'Twas the night before Christmas. I know everyone's groaning like, uh-oh, what's going to happen now? So I want everyone to kind of bear with me on this. I've rewritten the lyrics, and I will post these to Twitter after I've read the poem. And in honor of my good friend, Mr. Thornton, he features in this poem. But don't worry, Tommy. It's all good. So it was remarkable. I started this as a lark, as a prank, but the words just kind of wrote themselves. It really was unbelievable. I'm just trying to pull this up here right now. Hey, Tommy, are you there? Tommy? Thomas Thornton, are you there? All right, whatever. Nevertheless.
Yes, I am here, George.
Hey,
I'm just.
Hey, happy holidays. Where are you? Are you in Greenwich? You out on the West Coast? Where are you, my friend?
I am in Greenwich, and just getting into the whole Christmas celebration. Got family coming over this afternoon, and I'm really excited. It's been a great year, and very, very grateful. So
That's awesome.
That's what I'm doing.
And thank you.
And watching football.
And who's playing, Tommy? I am not even watching football today. Who's playing today?
I see the Chiefs. The Vikings are beating the Giants. I can give you some scores if I just hit ESPN, but
okay.
Keep going. I want to hear this poem.
Okay, here we go. All right. If you guys are liking this, I want to see your reaction, so you can put the heart thing and all the exclamations. Here we go. I know they say trying humor is dangerous because it's hard to be funny, but I think you guys are going to like this one. So 'twas the night before Christmas. 'Twas the night before Christmas when all through the house. Tommy, please mute yourself. Hold on. Here we go. There we go.
Okay.
'Twas the night before Christmas when all through the house, not a creature was stirring, not even a mouse. The charts were posted by Thornton with care, in hopes that St. Pal would soon be there. The bulls were nested, all snug in their beds, while visions of bull markets danced in their heads. And Kramer in his kerchief and I in my cap had just settled down for a long bull trap. When then on CNBC there arose such a clatter, I sprang from my bed to see what was the matter. Away to the Bloomberg I flew like a flash, tore open the barrens to witness a crash. The moon on the breast of the new fallen snow gave the luster of midday to prices below. When what to my wondering eyes should appear but a miniature sleigh and 8 tiny reindeer. With a little old driver, so lively and quick, I knew in a moment it must be St. Pal. More rapid than eagles, his coursers they came, and he whistled and shouted and called them by name. I don't know if I can do this with a straight face. I have to control myself. Now, sailor, on. Now, sailor, now. Chamath. Now, Portnoy and Gerber. On Musk, on Wood, on Bankman Fried and Kramer. To the top of the porch, to the top of the wall. Now dash away, dash away, dash away all. As dry leaves that before the meme stocks fly, when they meet with an obstacle, mount to the sky. So to the top house the coursers they flew, with a sleigh full of toys, and St. Pal too. And then in a twinkling I heard on the stair the prancing and pawing of each little bear. As I drew in my hand, the chart turning around, down the chimney St. Pal came with a bound. He was dressed as a bull, his head to his foot, and his clothes were all tarnished with ashes and soot. A bundle of dollars he had flung on his back, and he looked like a peddler just opening his pack. His eyes, how they twinkled, his fed speak so merry. His cheeks were like roses, his nose like a cherry. His droll little mouth was drawn up like a bow, and the beard of his chin was as white as the snow. The interest rate hikes he held tight in his teeth, and the recession they brought covered his head like a wreath. He had a broad face and a little round belly that shook when he laughed like a bowl full of jelly. He said inflation was transitory, a right jolly old elf, and I laughed when I heard him. I could not believe it myself. A wink of his eye and a twist of his head soon gave me to know I had nothing to dread. He spoke not a word, but went straight to his work and filled all those stockings, and the market went berserk. And laying his finger the side of his nose and giving a nod, up the VIX rose. He sprang to his sleigh, to his Fed governors gave a whistle, and down went the market like a falling missile. But I heard him exclaim ere he drove out of sight, "Happy Christmas to all, and to all a good night." So, there you have it. So, without any further ado, we've got a wonderful room today. We've got Tommy, and then we are going to speak of the auto company, the car company, which shall not be named because it's particularly timely. And we have Motorhead, who's up till God knows what hour in Tokyo right now. And I know a few followers of Tesla that are follow it as closely with as much green eye shade as Motorhead. There's a lot of narrative-filled poppycock that appears regularly on Twitter Spaces. You all know there's that one fellow who keeps running these spaces. Why Tesla will triple this year. I'm thinking of we're going to start running spaces. Why Twitter will go down why Tesla will go down 67% next year. Actually, I think it will. So enough with narratives and stories and opinions. I was really triggered by that space that Musk appeared in earlier this week. It's highly unusual that he puts himself out there. We'll get to that later. I don't want to get too far in the weeds on Tesla. We're going to get Motor up here in a second. But to me, the whole space that he participated in earlier this week was a huge sell signal. I mean, there were so many red flags out there. It was outrageous. So anyway, Tommy, we were last together. You and I spoke earlier this week, but we had that emergency space after the close on Thursday the 15th. We tried to circle the wagons. It was phenomenal. Yourself, Ian Harnett, Michael Howell, Cantro, I'm missing some folks. But we tried to sound the alarm. I reminded everybody that you were unusually extremely short. Turned out to be, again, a very prescient call on your part. My hat's off to you. So, past this prologue, that was then, now is now. You and I spoke, I think it was yesterday or the day before. So, I want to turn it over to you, to Tommy, just sort of set the stage. Where do you think we are? Where do you think we're headed? And then we'll get this party started. So, Tommy, the floor is yours.
Okay. Hey, George. Well, happy birthday tomorrow. I did not know that your birthday was on Christmas. You are the savior in my life. But I will say, I'm kind of going back and looking at predictions from last year from a lot of the sell side banks. And, I, as much as people rag on the banks and say, oh, they always get it wrong or this and that, most of them were pretty spot on. And a lot of people were, saying that the returns were going to moderate, that is about as bearish as they get. But I think that's it was actually kind of interesting that just looking backwards, that they were talking about how the Fed was going to raise rates and inflation was a big problem. Goldman was saying global economic growth will head lower. A lot of different things like that, and now looking at the 2023 predictions, and I'm not a big fan of saying, "Oh, where will the market close by the end of the year?" I'll tell you my that in a second, but the thing is, most of the strategists are within 200 points, and I hate using points, but I'll just say, let's say 3,800. Well, maybe let's go a little wider, 3,800 to 4,200. On the S&P, and that's about as narrow as it gets. And so I I I don't like looking at the end of the year price targets. I think it's hard to tell, especially there's a lot of stuff that can happen that can go right and go wrong. Um, and I'm not going to give you a target because I don't give price targets on just about anything. The thing that we have to just think about is this could be another year of a lot of sideways but very volatile on the upside and downside type of action. And I talked to you, George, the other day about, even though I'm bearish and you're bearish, and there's times where I will get bullish for moderate periods for bounces. uh, I think that if we go into the earnings season, and that's what's happening now. um, My wife just texted me, "Hun, it's Saturday and Christmas Eve." Okay, all right. She's calling her divorce lawyer.
Yeah, Tommy.
But
Do you have the
no, 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 no.
No,
I'll,
Tommy?
I'll
Do you have the
say,
same problem I do with Susan, which is your significant other thinks you're having an affair? Yeah, you are having an affair with Twitter Spaces. Do you have that problem too?
yeah, it's like, okay, it's just you might hear the tweet or the text coming my way, but actually, we don't have any family over right now. We can talk. I can talk. I'd be watching football, and would she be giving me a
Yeah,
hard time? Probably not.
but
But
Tommy, you know
anyway.
what? Just tell your wife if she's willing to come in here and talk about what she thinks of the put call ratio in Tesla. She's welcome. We're very inclusive. So, like, what's the problem?
Yeah, but she's not a big fan of Tesla. I rented one in Los Angeles, and it drove her crazy. She was like, I don't understand this car. I hate it. Anyway, that's another story. But my view on 2023, uh, I think we're going to have this range bound type year, and that's not so unusual. It could go lower, and it could just have these bounces, just as what we've had. And it's kind of similar to what we saw coming out of the dot-com bubble. Maybe not the same as what came out of the great financial crisis, because QE and Ben Bernanke went crazy, stimulating. But the thought I have is that I'm trying to put together a big list of, instead of like the predictions of next year, the predictions of what could go right and what could go wrong, and then sort of add that as a scoreboard of things. And it can vary from the Russia Ukraine to the Fed to earnings to everything. And I think that's kind of the thing that I want to stress is, instead of just us all coming into this room and you know doing well, sitting around in a circle. I think the main thing is we should really start to think of both sides of the equation, of not just the bearish side, because it's really pretty easy to find a lot of bearish things out there, but like what could possibly go right. And I think um, that's going to be a commodity, a rare commodity of what could go right, that will add value to the spaces. And I think a lot of people can, as much as we want to just say, oh yeah, we want to dump on this and that, what could go right? What could change? What could be the bullish turning point? Maybe not overall for everything, but maybe for a company, maybe for a sector. I mean, it could be energy. If the SPR, oh, we're going to refill the SPR, there's a bullish thing right there. But that's kind of like my view right now. And heading into the end of the year, I was very, very short, way too short for my comfort. And I've taken down some short exposure, maybe a little too early on some things, but so be it. I need to relax. It's been a tough year. Everybody's tired. It's important to recharge. And George, I'm glad you got away and recharged. And as I said to you, the first thing I said to you the other day, I said, you should go away on vacation more because it seemed to work pretty well for you. And but anyway, I just that's about all I have. I'm gonna let everyone else go. If anybody has any questions or wants to contact me, you know where to find me.
Hey,
And thank you for everyone and all the new. I have a lot of new subscribers from George's Spaces, and I'm really very grateful for that. And here's to 2023.
well said, Tommy. And I want to thank you for all your contributions to this space. It really, you're one of the more normal people in this space, and you act as a counterbalance to my insanity. And you've had more than your fair share of outrageous calls. And I'm not going to embarrass you. If you want to know how well Tommy's calls have done this year, trial him, ask for his service. I have no commercial affiliation with Tommy. I'm a subscriber. It's incredible value. And let's just say, with a little bit of British understatement, his returns have been highly satisfactory. Which, and I'm just going to take this opportunity. We talked about this a couple of spaces ago. Aside from being a great market observer, Tommy, I'm going to embarrass you now. He's just a really great guy. He's normal. He's polite. He's a gentleman. He's well bred. And you look at the vitriol and the hate that gets thrown around Twitter. Of all the people to be attacked, like Thornton, like really? I mean, someone wants to mix it up with me. Well, okay, so George is a big mouth. He threw the first stone, whatever. That's even not true, but whatever. I just think, and I hope, maybe in 2023, everyone could take it upon themselves to try to just be a little bit more civil. One of the devices that I try to use, and I'm sure we've all experienced this, and sometimes maybe we're all guilty of it. When you're listening to someone, are you listening to learn or are you listening to rebut? How many times you hear someone and you're triggered by something they say, or you disagree with what they say? And it may be that you're largely in agreement with them, but there's like one thing that you disagree with. And so it may not be you, maybe it's somebody else. Instead of like arguing over the one thing you disagree with, why not celebrate the 80 or 90% you do agree on? And I say that not because one should avoid confrontation, but if you can build from points that you agree on, you can then have a respectful back and forth on the points you disagree on. And I find on Twitter, too much of the time, there are too many people who just want to throw stones. And I really wish that this anonymity or pseudo anonymity was abolished on Twitter. I know there are reasons for keeping. I get that. Okay, there are puts and takes. I understand that, but I would just say, rather than argue whether it should. And by the way, no one's going to come up here. I'm going to shoot you down right away if someone tries to get into a debate over whether you should or shouldn't have anonymity. That's not the point I'm trying to make. The point I'm trying to make is by having anonymity or pseudo anonymity, there are some people out there who say things that they wouldn't say otherwise. In an ideal world, I'd be for total anonymity and pseudo anonymity, provided people, behave themselves and act, behave like you would if people knew who you were. And the amount of vitriol and invective by know nothings, and people, who follow me, a couple of weeks ago, I had a lot of shit thrown at me because the fun got off to a bad start, and a lot of my friends came to my defense. Losing money is part of the game. If you're not losing money, you're not taking enough risk. And if you haven't been in the seat before, you don't know what it's like. So when I call people out, I don't call people out for losing money. I call people out for being bad, what I call bad actors, being dishonest. There's a difference, huge difference. And in fact, for every person that gets their nose bent out of shape because I go after a bad actor, I have 100 of you thanking me for putting the truth out there. So I would just ask everyone, kind of as a resolution for 2023, to just try to be a little bit more patient, a little bit more civil, a little less judgmental, and try to find more where there's a common ground. And also, I would say, when someone is talking crap, it's incumbent upon you to call them out. So if someone's attacking Tom Thornton, and if you think Thornton is a reasonable guy and is in the right, it behooves you to speak up. Because, the policing on Twitter, the patrolling on Twitter, Twitter is it's a wonderful thing we got here with these spaces, but it comes to the downside. And I think as a community, we can self-police. And look, everyone. Sorry, go ahead, Tommy. Go ahead.
Hey, George. Well, thanks. And I'll say this. The best thing to do on Twitter is when you have someone who is one of those anonymous uh, people that all they don't put any content out other than tell everybody that how bad they are. And we all have those, and it's okay. All I do is I just block them immediately, and I don't really care. And listen, I'm all for discourse with people that have a differing opinion with me. There's times where I'll rib somebody a little bit, and I don't go over the line, but they'll rib me back, and I can handle it. I'm a big boy. I've developed a very thick skin over the years, and I suggest everyone else do that as well. But like, I put out recently saying that I speak to some noted bulls out there. Um, I speak to Dan Ives of Wedbush. Okay, and I call him a serial price raiser. Okay, I give him shit on some of the calls that he makes, and I know he reads my stuff, and I know that I can have an influence on him if I'm saying, hey, this is where the chart's going of this particular stock. It could be, a phone maker or a car company or something. And it may change a little bit of his opinion on things. I'm respectful to him, even though I disagree with him on a lot of things. And I kind of laugh at some of the things that he says, and he may with me as well. But it's okay to have that type of disagreement and have a discourse. And I think that's a good thing. And George, to be truthful, I think maybe you could tone it down a little bit going into 2023 because I've heard you go a little cuckoo um, over a couple periods with people. And yeah, some people have crossed the line. And you know what? You have the mic, so you could take it back if those people are crossing the line. It's your show. You can do what you want. And I just think that George is the thought that you have as far as having a better discourse with people is a good thing. And you know something? We're all trying to make money here, and there'll be times where the Bulls in something will make money, and the Bears will make money in some things. Let's just try and be on the right side of those things, and remember that we're all just human, and we make mistakes, and we don't need to be called out for every single mistake we make. So, I'm all for taking the high ground, and I write that I have that written on my pad on my desk, take the high ground. And sometimes when I want to call somebody an effing idiot or go a little even stronger, I look at that and it restrains me from saying some things. Um, Maybe that's just going over the years of working for some very difficult, tough people, but that's how I roll.
No, I appreciate that, Tommy. I appreciate your constructive criticism, stroke advice, and I know I can get hot. And I value if a friend or someone I respect, such as yourself or Ken Roberts or Cantro or Abe or KFAL, whatever. I'm just looking here. Is hey George, whoa, like I'll listen. But when some anonymous hater, no, not going to happen. And so I think we try in these rooms to be civil. I think we usually pretty are. We had some exceptions. I had a dust up with my friend O'Hare a few months ago, but we kissed and made up, and we're all good, and we understand each other. But I agree about blocking. I learned that from Mark Ahodes: block early and block often. I'm reminded. I'm not religious, but in Judaism, I'm sure in other religions as well, they have this idea that you should only say things for constructive purpose. So when you're about to put your mouth in gear, just ask yourself, what is the point? Like, what are you trying to do? Is it trying to diss somebody or hurt their feelings? It's okay to have constructive criticism, but if it is malicious and just to undermine them, no, don't do it. And if you look at the folks on Twitter that do this stuff, I mean, we're talking about the haters. They do. There's no constructive purpose, none. As opposed to if you were to say to me, "Hey George, you really kind of went over the line with O'Hare or whatever. You should apologize to him." Blah blah blah. That's fine. And I knew I had, which is why I called him afterwards, and we talked for an hour and a half. So to err is human, but it all goes back to giving people the benefit of the doubt. And one other point I want to make on this, and Tommy, I want your reaction to this. A lot of times, both sides can be right. I hate electronic communications because it just lends itself to so much misunderstanding, particularly on Twitter. Because in FinTwit, we could be talking about multiple time frames. You could be like, you're more of a market animal, you're more short term. And then you have guys like Cantro, he was here, I'm not sure where he went, who's longer term. And so, you know, let's say, uh, I don't know. Let's say that Motorhead really likes Tesla, all right, which he does. He hates it. Let's say Motorhead really likes Tesla, and you look at the chart, Tommy, and you're like, well, hey, Motorhead, you know what? I think it's a short right here. And really, you're just looking for a 10-20% pullback when the long term chart could look great. And he gets all butthurt because you're saying something negative about one of his holdings, but you're looking short term and he's looking long term. And I also find allied to that on Twitter, there are a lot of folks who have not operated in an institutional environment, and they get butthurt when someone says something negative about one of their holdings, and they take it personally. So one has to be sort of ruthlessly objective about it, and don't let your objectivity get compromised by whether you're long or short the stock. And then also give the other guy bandwidth. Like, Motorhead might say, oh, okay, well, instead of hating you because you said something about his favorite long idea, you might say, okay, I get it. Yeah, I see that the RSI is at 80 and it's 30% over the 50-day moving average. Yeah, it's entitled to a pullback. So instead of fighting with each other, oh, Thornton's bearish on Tesla, Motorhead's bullish, just celebrate the diversity of opinion and just understand and accept that both can be right. And the problem is a lot of investors on here, they just get butthurt. I'm using that phrase a lot. That if anyone says something contrary to one of their positions, they take it personally. And Tommy, I'm sure you've experienced that before. You got any thoughts about that?
Yeah, can you hear the Christmas music going in here? It's like Buble happening hardcore right now with Leanne. Um, yeah, I'll say this. I don't agree with his thesis on Tesla, but Gary Black, who you can hear the agony and I guess just frustration with Elon Musk and what he's doing with Twitter, that's taken away the focus from Tesla. And he puts this his 10 catalysts that are going to happen, and it changes a lot, and that's cool. He's a smart guy, very he knows what he's talking about on many things. I think he's dead wrong on Tesla, and I think he knows that, and I think it's so frustrating. But I asked him, I said, well, you know, he said something in the sense that I I I think that he's just become so distracted with um, with Twitter, and he recognized this earlier. That was the point. And I said, then why didn't you sell? Why did And he's like, I'm a long term investor, and in hindsight, I probably should. You know what? That was and I wasn't going at him like, you're such an idiot, but like, you still can sell. You can always get in or out or do whatever. I mean, you're managing money for other people. You just can't get too, in the short term, long term type thing, George. You just can't get too wrapped up in something, because I can look at a long term monthly chart of something and say, yeah, it looks great. But there's been a 20% drawdown in, the last 6 months in something, and that's not acceptable for a manager who manages money for other people. So yeah, time frame really matters. And yeah, I think that if anything, this holiday season, maybe everybody should take a step back and say, this has been a very, you know, difficult market, and a lot of people have lost money, and a lot of people took too much risk in previous years with too easy Fed. Maybe it's time that, instead of bashing them and saying how stupid they were, look, a lot of us have gone through these periods. We kind of recognized what was going to come down. We still make mistakes, but still, the point is, have some empathy. Empathy is like my most. Yes, honey. Yes. Okay, so I got to run here, but empathy is an underutilized trait that people don't understand. And if you can help people going forward, and I think that's something that people should, strive to do. And civil discourse, George. I think
Amen.
that's key.
Amen.
Okay.
Hey,
Okay. I'm just gonna go on mute here, because I'm sensing
yeah.
uh,
All
marital
right. So Tommy,
marital issues
100%.
here.
Thank you for being such a friend. If I don't talk to you, Merry Christmas. I'm sure we'll do a space for the end of the year, but thanks for being you. I love you, man. This is great. And thanks again. Thanks so much. All right. So go on mute, Tommy. So we now have Motorhead. And hey, Motorhead, what is it? 2:30 in the morning there? What time is it where you are?
It's 4:30.
Oh, 4:30. Jesus Christ. All right. So Motorhead is a friend of these rooms. He is a career auto analyst. He's a serious guy. I don't want to steal his thunder. I will pile on though and add my comments. But I've had a number of conversations the last week or two. We've had a dialogue for months, and he totally nailed it. He put out a piece back in June, July about what was going to happen, and it's completely happened. And what I like about Motorhead, he's a real analyst. I mean, he and I spoke about the Musk appearance in Twitter Space the other day. I don't want to steal his thunder, but people have so many narratives and so many feelings and opinions about stuff. And if you want to get down and dirty and actually put together a spreadsheet and talk about cash flows, earnings, balance sheets, selling prices, et cetera, deliveries, Motorhead's your guy. And so I always talk about the car company shall not be named. No, it needs to be named, and we all know it. And saying it, without further ado, Motorhead, I'm just going to give you the mic, and you talk about whatever angle you want, go as long as you want. But you know, I guess when it comes to Tesla, forget about you and I have a similar opinion about the stock. I'm less interested in that than I am. Remember, you're in high school and you do a math problem, and then the teacher says, "Well, show me your work." So show me your work. Show the room your work. Tell the room your work. Okay. So why don't you just weigh in, Motorhead? Like, where are you on Tesla? Why? How did you get there? And let's leave emotion. Not that you're an emotional guy, but it's easy for idiots like me to get triggered by Elon Musk and all this sort of stuff. You know, liars figure, but figures don't lie. So, Motorhead, the floor is yours.
Thank you, George. By the way, congratulations. You're up 25% since October, and you've outperformed the S&P by 20%. So well done. And I hope you had a great vacation. Um, So Tesla, the biggest thing, the thing that everybody should realize is that Musk, who is a total narcissist, and it's not a surprise that ever since he took over Twitter, that he's like dropping in on these spaces, which is it's like the gift that keeps on giving. It's like, and he dropped in on this space on Thursday night, I believe, and he went out there and he said, I'm not going to sell any more Tesla stock until at least 2025. And that was the headline. Bloomberg had it and everything. But there's anybody who follows Tesla should follow this YouTube channel called Tesla Daily. It's a Tesla fanboy run channel by Rob Maurer. And he's extremely objective, and he's a fanboy, but he completely tells it like it is. And so I'm sitting there, and I listen to this every day when I wake up. And he said that he said, yes, Elon said that he's not going to sell anymore, but he also said this, and these are the 3 points that anybody who's invested in Tesla should think about. He said 2009. This is Musk's. He said 2023 could be like a 2009 type of recession, and that's pretty bad. And he said in that situation, Tesla could maintain prices but would lose volumes, which is a no-brainer. And then he said, but Tesla is not going to lose volume, meaning he's going to chase market share, which is, I mean, I've been covering autos for 27 years. And Nissan, look at Nissan. I mean, they're a piece of shit right now. And all they did was under Carlos Ghosn was chase market share. And in the second quarter of 2020, after that everybody had to stop their factories because of COVID, they burnt through 80% of their net cash. I mean, I've never seen anything like this. But it's like they say, it's like, when the tide runs out, we'll all know who's not wearing swim trunks. And that's exactly what happened. And I think Tesla's in that same boat. And the third point that he said was, Tesla will grow, whether it leads to lower margins or negative margins. And I just can't believe this didn't make the news. It's like he basically guided for 2023 that they might make losses. I mean, I sort of knew that, but it was astounding that the big takeaway from that Twitter space that he made was that he's not going to sell any more shares. It's like, who the hell cares, But anyway, so here's the problem with Tesla. This is what's going to really kill them next year, in my opinion. They built up Model Y capacity, not only in China, where they already had it, but they built a new factory in Austin, and they built a new factory in Grunheide. And they basically have, if you look at the price range from $60,000 to $80,000 SUVs, they have 60% capacity versus what the entire market sold globally last year in 2021. And even if that market doubles, they still have 30% capacity for the entire market. Now, just to give you a benchmark for what this means is the only car model on Earth that has ever commanded that kind of market share is the Toyota Corolla. Because they're the last ones making a cheap compact car, and they've got 45% of global volumes in that price class for that type of car. So I just don't see how Tesla will not come crashing down, sort of like Nissan did in Q2 of 2020 after COVID, without losing everything. I mean, this is like, it's a no-brainer. And so what I'm waiting for, and George and I had a great conversation the other day, is like, I just can't wait to see, because they've committed to 50% year-on-year growth. I can't wait to see how Musk explains whether they still will or not make 50% growth next year.
So Motorhead, let's just stop right there. So let's get into it a little bit. So my reaction, I mean, I was in that space. I listened to it, and like you, I was shocked about the takeaways coming out of that space. I thought I was in a parallel universe. The sycophants all had their knee pads out, and if you knew what to listen for, talking about he wants to talk about a recession. Well, wait a second, this is the company which supposedly had infinite demand, and the levers are they just have to start advertising. Like, what happened to that story, right? And so
right.
when Elon Musk starts weighing in about Jerome Powell shouldn't raise interest rates, it's sort of like, look over here, not over there, and the narrative's changing. And you have a bunch of sycophants who don't know how to do any securities analysis, don't know how to look at balance sheets or income statements. And I'm taking notes, and I'm like, wait a second. The guy's telling you units are going to be down. The guy's telling you he's going to cut price in order to continue to grow. And I'm start thinking to myself, oh my God. So Motorhead, let's break it down. Let's break it down.
Okay.
Let's go to, and one of the things I think people in these rooms like is, about these rooms is it kind of, these rooms tend to take on what a high level buy side conversation might look like, right? So from one auto analyst to another, you and I, to talk about, let's first talk about 4Q in terms of what you think delivery is going to do relative to expectations. And first we're going to do 4Q, then we're going to do 1Q. So let's talk about what the shortfall, in your view, might be with respect to deliveries and gross margins. And given the way operating leverage works in a company, you cut price. Let's just walk through that. Talk about, obviously, you don't know what the earnings are going to be. But let's talk about min-max probable for 4Q numbers. And then we're going to get into min-max probable for 1Q 23 and the year 23. So let's talk about the potential downside in the earnings. Like, how bad do you think the 4Q earnings could be as you look at the numbers?
I've got minimum 17% miss versus the consensus estimates. And that's this is with a really generous assumption that their Q4 COGS per unit drops by 5%, or sorry, 3%. And actually, this year, COGS per unit has not dropped at all. It's gone up and up and up, and it makes sense because they've got 2 new factories that they're ramping, and using their lax accounting standards, they depreciate their fixed costs by unit volume. So the more they produce, um, they're they're going to depreciate more. But the thing is, that works when your prices are high. But if prices are going down and they have to depreciate more volume, like Musk said, they might have negative margins.
Did everyone hear that? Negative margins. Negative margins.
I didn't say that. Musk said that.
No, I know. And for a guy who, always spins things in a positive way, think about that, boys and girls. So, Motorhead, you're saying you think there's a minimum 17% earnings miss in 4Q. How bad could it get? 4Q.
So, minimum 17% miss in 4Q. And by the way, my delivery estimates are 420,000 units versus consensus, which is 430. I don't care about, you've got all these Tesla fanboys counting cars and thinking they're financial experts. I don't give a shit about the volumes. It's all, I've been an auto analyst for 27 years. You can sell all the volumes you want, but if prices go down, you're gonna lose money. But the point is, if I take Q4 COGS, cost of goods sold per unit, and let's say I give it, let's say instead of going down 3%, it stays flat with the Q3 level. Then I mean, it's a shit show. I mean, we're talking about, instead of a 17% miss, we're talking about a 27% miss.
Okay. So, Motorhead, 4Q, is the plane inflects downward. 4Q only begins to reflect what could happen. So now let's roll forward to 23 with a full effect of price cuts and declining volumes hits, and talk about what you think. I mean, they keep talking about 50% or unit growth, all this nonsense. Talk about what the min-max probable where deliveries might go, and obviously, they can sell more if they just cut price more. So there's a trade-off between pricing and volumes. But talk a little bit about where you think deliveries could go, what growth in deliveries could be in 23 relative to consensus. And then, so let's start with that, and then we'll talk about margin. So contrary to 50% unit growth is what they've been promising the street or guiding the street. What do you think unit growth might look like in 23?
Well, I mean, it depends on prices, but I know these guys, and they'll drop prices and they'll try to fake it on the accounting front. But I see the street has 1.9 million for next year. I've got 1.5, so only 16% growth.
Wait. The street's at 1.9 and you're at 1.5. Did you say that? Did you say that?
Yeah.
1.5, and this year's going to be what, like 1.4?
This year's going to be 1.3.
Okay, so now the company whose units are supposed to be growing 50% a year forever, it's only going to be up 15%. Your best guess in 23. Did I hear you right?
Right, with about 15% price cuts.
Okay, so now let's play with this, Motorhead. Tesla's gross margin using their fraudulent accounting. By the way, we have a witness. We have this fellow Whalen who's going to come in the room up on stage in a minute after you.
Okay.
I think he used to work in the Fremont factories. This is going to be good. So Motorhead, using their fraudulent accounting, where they capitalize a lot of expenses, they claim to have, what, a 27% gross margin or some nonsense like that?
30,
to just explain,
30.
Sorry, 30. Okay. Explain to people, to steal that line from margin call. So, Mr. Motorhead, I understand that you know something about automobile income statements. Okay, fine. So, Mr. Motorhead, if you have a 30% gross margin and you cut prices by 15%, what does that do to your gross margin? Pretend I'm a golden retriever or a small child.
Okay, so I've got given the price, so I'm assuming like a 15% price cut. I mean, that's minimum for Tesla next year, because no one's buying cars right now unless they're discounted. I spoke to Subaru yesterday, by the way, and they're saying that the loan situation and the lease situation is getting really screwed up, and they don't even have a captive finance division. But what I'm saying is that they're fine because they have dealerships, but Tesla sells directly to the customer. So all these 30% price hikes that they had since COVID started, they pocketed 100% of that. The OEMs, the legacy guys, their dealers pocketed most of the price hikes. So what's going to happen is you're going to have the OEM, and they're starting to lower prices. And they don't care, because it's like they make 75% of profit growth from increase in output. The OEMs do, the legacy guys, and Tesla probably does too. But if their prices go down, they lose money. So I've got unit volume going up 16%. I've got prices going down by around 15%. And that's generous given how expensive their cars are right now. And we're already seeing order cancellations. But so I like to look at operating margins, because, the US, big three, they like to use, gross margins, which doesn't include R&D, and Tesla does it more sort of like on a European accounting style, which puts R&D at SG&A. So I look at operating margins. So they made 16% operating margins in Q3, ex ZEV credits and all that. I see that going to 12% in Q1. And just to give you an idea, I'm looking at Q1 consensus right now, and the consensus net income, GAAP net income estimates are $4 billion. I've got 2.5.
And by the way, Motorhead, if you're talking about 16% operating margin, ceteris paribus, and you cut prices by 15%, How do you get only a 12% operating margin? Why shouldn't it be a number closer to zero?
It's yeah, I agree. But I'm modeling things out the way Tesla runs their books. So
Right.
I'm a victim
No,
of fraud.
I get that. I get that. But in terms of just simple numbers, again, liars figure, but figures don't lie. So listen, the future's unknowable. It's always been max probable, but what you're describing is a left tail, which is so enormous. I mean, the decline in earnings for Tesla could be just like unbelievably bad, don't you think?
It's catastrophic. Like I said. I mean, I'll post this chart later, but Nissan was the dodgiest. In terms of accounting and in terms of like you're following their monthly unit volumes and everything, and then they come out with this earnings surprise when they should have like an earnings demise, and so they frauded their way through like through the QE bubble from 2009 to whatever, and then once COVID hit, oh my God, so Toyota and all these other guys, they did badly, but Nissan actually they burnt through 80% of their net cash, and they had to issue a $3 billion bond after that.
Right. So, Mona, let's put it this way. What are consensus earnings per share for Tesla in 2023? Markets are forward looking, so let's figure out fourth quarter 22. What are consensus earnings estimates for Tesla in 2023? What is your sort of best guess? Not trying to be a hard ass about it. And then give us a range about min-max probable. Where could earnings per share go for Tesla in 2023?
Okay, so you have to forgive me, but I sort of go by GAAP net income.
Okay, all right, okay, fine. GAAP net
Yeah,
income, that's fine. Go ahead.
I've
Go ahead.
got GAAP net income in 2023 at $5.2 billion. And the street is, hold on one second. The street is at, I think, something like, yeah, holy crap, 22 billion net.
Whoa, stop.
17. So I'm
Stop.
at
We have a bad connection here. You just said the street was at 17 and you're 5.2. Did I get that straight?
I'm at 5.2. The street is at 17.5.
Mic drop. Okay. And then Motorhead, that's like your single point best guesstimate. But if you were to like bracket that in terms of how good could it be and then how bad could it be, what's the range you could see on this thing?
I think realistically, given like I've seen, I've been through the .com, the financial crisis and all that, and I've followed autos through the whole time, and I think to be realistic, I think Tesla will make a loss next year.
Tesla will make a loss
because there's never been a car maker who builds two new factories to make the same model. Usually when you build a new factory, you're building a new model, I mean, there are exceptions, okay? Like the RAV4 became the most popular, passenger car in the US, so they had to build another factory for it. But it's like Tesla built like two new factories and expanded their Shanghai factory by 30% in capacity just to build the Model Y. It's ridiculous. I've never seen anything like this happen. It's a train wreck.
Motorhead. So look, let's put some other numbers on this. So streets at what you said, 17 billion. Is that what you said, or 22 billion net income for next year? 17 billion.
Yeah.
The stock, they still have a market cap of 390 billion, despite the fact that it's collapsed so much.
Right.
You're at 5 billion. 5 billion, 17 billion. It's a freaking car company, and the market cap's 390 billion. And you've got units growing only from 1.3 to 1.5 next year.
Yeah.
So now let's talk about valuation, because I think we're gonna get witness up here in a second. So let's talk about valuation and cash flows, because like the numbers are fraudulent. They're just fraudulent. I've never seen any company with such aggressive accounting as Tesla. And look at cash conversion, you look at net income, and then you look at actual cash. There's like a huge gap between them. But let's talk about valuations And you and I had a conversation the other day where we were talking about price to sales or EV to sales. I mean, it's hard to fake sales. It's easier to fake earnings. So you help me a little bit here. Tesla, they're going to do what, 80 some odd billion in revenues this year. From the sounds of it, sounds like you're not looking for any revenue growth next year. If you got units up 15, 16 and pricing down 15, you're kind of like flat. The street, I haven't looked at it recently, but I seem to remember they're at 110 or 115 billion or something like that.
Yep.
So at 85 billion, you're at 4.5 times flat sales in terms of EV to sales. How does that stack up to other other automobile companies, Motorhead? I mean, from recollection, from memory, don't auto stocks tend to sell at like half of revenues or something like that?
Yeah. So I mean, the average, so counting up the big boys, right? The ones who make, like 5 to 10 million units a year, their average EV to sales ratio is something like 0.7. Tesla is like 3.5. So here's what I did. What I did was I gave Tesla Ferrari valuations just to see, based on my estimates. So if Ferrari trades at a 34 times earnings on 2023 estimates, if you give the same multiple to Tesla based on my estimates, not consensus, Tesla should be at $50. Now, the better one is EV EBITDA, and even there, this is assuming that they don't make a loss next year, which is 50-50 in my opinion. It should still be like at $90. So it's
Well, and that's actually flattering to the company in the sense that if you were to put this in the same EV to sales multiple, let's do it that way. EV to sales multiples, other auto stocks. What do you come up with, like 30 or something like that?
I haven't done that calculation in a while, but
Yeah, but think about it for a second. You said the average guy's at 0.7.
yeah,
These guys 3.5. So take 80% off. I'm just doing it off the top of my head. I don't have the debt thing in front of me, but 80% off the equity value would be, $25.
yeah, no,
And
listen,
so,
my
so let's not argue between friends. It's
okay,
25 or 50. It doesn't really matter.
yeah,
It's 122 right now.
right,
So what people don't understand is that you're looking at a step function change in the earnings estimates of this company. The earnings are going to collapse, and the premium valuation, which has all been the Musk factor, that's going to collapse.
right.
Uh, and let me ask you this, Motorhead. You know what really triggers me? Listen. I like people who disagree with me because I learn from them. But it makes me more thoughtful, and it causes me to examine my own positions. But the Tesla fanboys, and if any in the room, please come up on stage. We'll be very respectful. It's not that I disagree with them. It's that I don't respect them. It's like a clown show. You and I could agree. I want your reaction to this. You and I could agree. You're being too hard on the gross margin here, and you're not giving enough credit for the R&D over there, and da 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 da. Okay, it's a clown show.
Yep.
These guys don't know how to do any analysis.
Yep.
And so they substitute all this other nonsense, which is again, liars figure, but figures don't lie. It's all about the narrative. It's also about Elon. By the way, I hate people saying Elon. It's like they're his personal friend. It's like when you watch sportscasters talk about Michael Jordan. Michael, who the fuck are you? You know him? No, it's Michael Jordan. It's Elon Musk. Elon. Okay, and so whenever you hear somebody talking about anything except numbers, it's like they're playing tennis, running around their backhand. The reason they talk about anything but the numbers, witness, we're gonna get to you in 1 second, because they can't talk the numbers. They substitute bullshit for substance. And what I like about you is you got the goods, you got the numbers. Liars figure, figures don't lie. And so, Motorhead, let me ask you: in your travels, when you come across some Tesla bulls, forget about the bears. I don't want to get a bear echo chamber. The bulls. Are there some bulls who you can actually, and witness, we're going to get to you in a second. Are there some bulls out there who you actually respect their analysis?
Yes, no, there are. Believe me. And I take
Hey, how does that argument work? How does that argument work?
Well, I mean, so there's this guy Matt Smith who does models as rigorously as I do, and so we compared our earnings estimates in Q2, and he was right. I was completely way off. But it had to do with the sales of Bitcoin. But the point is that there's some guys out there like Matt Smith who really do a good job on doing their earnings models. I would say that's the only guy I know. There's some really sensible guys out there. I actually have a lot of fanboy friends. I mean, Twitter friends. I mean, there's some really smart guys out there, but the majority of them, unlike the Tesla Q crowd, they just don't know finance.
Exactly. All right, so Motorhead, I'm going to stop and
Hey, George.
Yes, Motorhead.
We've got Carl Hansen on the space. He is the guy who actually busted the RICO case at the Nevada.
Here he is. Okay, he's easy. Okay, Mr. Hansen, welcome to the stage. No doubt you've heard what's been discussed here, so I don't know what you want. You can speak to all of it, or the floor is yours. We're all ears. Go for it, Mr. Hansen.
Hey, George, thanks so much. I appreciate that. I did not hear all of it. I did hear. I came in. Brad invited me in, and I had heard you talking about the statement made by Musk. And I don't know what space it was or where it was, but I had previously heard you tell that story. And I thought it very profound when I heard it. It was over a year ago, I think. Whether it was a space, I don't know where it was. But interestingly enough, Motorhead had reached out and said that there was another former employee from Fremont, and they had mentioned and talked about drugs. So I don't look. I appreciate you getting me in here. I am not an engineer. Let me just throw a disclaimer out there. I am not an engineer. I'm a retired special agent with the Department of Defense. I'm currently a federal investigator in a different role with a different agency. I was recruited into Tesla. This is my short background. As a result of my background and experience, and asked to work in their internal investigations department, I became an SEC whistleblower. Am currently an SEC whistleblower against Mr. Musk and Tesla. I say against. We know that the SEC and whistleblower complaints and TCRs are not litigation, but I subsequently filed a Sarbanes-Oxley whistleblower retaliation claim in Nevada District Court, which is still ongoing against Mr. Musk, Tesla.
Carl,
Yeah.
Carl, tell them about the lithium.
So bottom line is, I'll do that. Let me just segue into that by saying what I was tasked to do was to conduct some pretty significant sensitive investigations with the primary focus being around narcotics trafficking, specifically high quantities of methamphetamine and cocaine allegedly tied to a Mexican drug cartel. Other than that, the second investigation involved large quantities of Tesla raw materials missing, and allegedly being stolen, reported directly to us internally by Musk that between January of 2018 and June of 2018, $37 million of Tesla's raw materials, aluminum, all this high grade stuff was stolen, allegedly. Come to find out, that was well over 100, closer to 150 million worth of product. And I had this information internally when Lynette Lopez actually broke the story regarding Martin Tripp back in June of 2018. So where lithium came into this. So my background, as you can imagine, I had some exposure and experience working in counter narcotics activity and investigations. And I kept seeing an increase in traffic regarding lithium and lithium producers visiting the factory. And I happen to know that, look, one of the primary cartels, the Sinaloa drug cartel, was really instrumental back in the day of.
Sorry, Carl. I'm sorry. a lot of this stuff about drugs is interesting, but it's just not what
Yeah,
I'm
that's
looking
fine. What do you
for.
want to know? I'm sorry, Brad. He
No,
asked me to jump in.
yeah, no. I want to talk about potential fraud and
George,
I want to talk about
George,
potential fraud. That's what I want to hear about. I don't want to hear about drugs.
Well, that's
George.
fine.
No,
Go ahead.
this is money laundering from the battery.
Yeah. Okay, but let's keep it.
When I was targeted inside, one of the things that you're talking about with respect to fraud is that it was regularly put out from executives, VPs, and individuals on that production line and floor that Mr. Musk's directives were clear. We'd get called into what was called a place called the War Room, exclusively investigations personnel directed by a team of thugs that Musk hired from Uber. Okay, and the only focus, the sole focus, and the directive from Mr. Musk was that he didn't give a shit about anything other than the Tesla's fucking stock price. That was the bottom line. He was tired of complaints. He was tired of people bitching about why they were having problems with, at the time, the Model 3 battery pack. Okay, and then we had the 420 funding secured situation, which was more fraud. That ultimately the DOJ was brought in with the FBI to conduct a criminal piece of that investigation, and ultimately, for reasons and information that, well, it doesn't matter. The point is, everything going on in 2018 during my tenure was being directed by Mr. Musk, and investigations into these other things. Okay. Sorry to use the word remiss. Whether the drug trafficking, the fact remains that between February of 2018, January of 2018, and June of 2018, unbeknownst to people, the FBI had an ongoing sealed investigation into a drug trafficking organization that was, in fact, moving large quantities of shit from Mexico. There was talk from investigators I spoke with that allegations that somehow this was related to large scale money laundering and fraud. I never got that far. I was shut down and pushed out. So my point being is that I don't care about my personal situation. I'm not looking for accolades or pats on the back. But I'm just going to shut up and let you guys talk, and I'll listen to other people. Thanks.
So, Carl, can you speak to any knowledge of financial fraud at Tesla?
I can speak to no personal financial fraud knowledge other than what I was made aware of in coordination and interviews and testimony provided to and discussions with Martin Tripp's then former attorneys. What they told me. I have no
Right.
specific firsthand.
So maybe I misspoke. I didn't choose. It's my fault. I didn't choose my words carefully. Can you talk about not stuff that you're personally involved in, but can you talk about knowledge that you have from other people about actual fraud that's occurred at Tesla?
I can talk about being told that there was fraudulent contracts ongoing with contractors on site and between Panasonic and Tesla with respect to millions of battery cells. That I do know. That I have photos of them. They were removed, and that's all I know about that. So no, I can't go further than that.
That's pure gold. So
Yeah,
can you talk about that a little bit more?
Carl, tell him about the lithium. I mean, look, tell him about the lithium.
What aspects of the lithium that so here's it. Okay, with the lithium, and again, it tied into the narcotics thing just because. But I went down. I started. There was lithium. This is a large lithium people coming up from Mexico, South America, Asia, all over, and they're doing these visits. And I started to inquire because I had identified the FBI investigation at that time tied to this methamphetamine shit. So I went down to a warehouse that Tesla had there, and I started. Looking for lithium shipments, and I introduced myself as an internal investigator for the company to a warehouse manager. I asked him to take a look at the tracking documents and shipping documents for specific items coming from. They have this global tracker of, and I hadn't seen anything like this before. I guess logistics wise and supply chain companies can track everything. Okay, so he pulls the system up. He's showing me everything. I said, I'm looking specifically for lithium coming from this particular area. in Mexico, and or other areas of Central and South America. So the guy was really, really apprehensive, and he again wanted to know what the hell I was looking at. And I told him I'm conducting an internal investigation, but people above you and me. And he said he needed to call his supervisor. He called his supervisor. He couldn't get a hold of him. Guy got back on, pulled up a computer, and when he pulled this thing up, I said, "This is what I'm looking for. I'm looking for lithium shipments coming out of these areas." He pulled up, I think, 6 or 8 different shipments coming out of the particular area that I was looking at. And I said, "Pull down, open up the manifest. I want to see everything on this." And at that point, he got real squirrely. He quickly shut the thing down. I was able to get a screenshot on my phone. I immediately got a phone call, and at that point was directed that I would not make any further inquiries about lithium. I would not go to these warehouses. And at that point, I was further marginalized and pushed out and then put on a gate outside.
You were asked to go to the head legal counsel to get more.
Oh, yes. Good point. Good point. So, yeah, that is a great point. It's one thing that really early on got my attention. I'm so good. I'm glad you recalled that. There's just been so much with this. So when I first started looking at this, I was told the primary point of contact for lithium was then General Counsel, Musk's former divorce attorney. What was his name? Oh, gosh. Oh, and hold on, bear with me here.
We don't need.
Anyway.
Carl, don't get hung up on the name. Just keep going with the story.
All right, so the story is this. So I was told that that's who I needed to. When I first went over to, I went to the executives working over there in the VP's office, whoever the hell that was at the factory, and I started asking around. I said, I need to get copies of lithium. They said, well, hold on, made a bunch of phone calls to some people in Fremont. Then she got back to me. She wrote down on a piece of paper, okay, if you're talking about lithium, your point of contact is the general counsel. And I said, that makes no sense to me. Why am I calling the general counsel? Well, I don't know, but that's what what's her name? The whoever's in charge of HR crap and all this told me that's who I had to call. So I called and left messages, got into an office, got I think either a paralegal or a secretary, told them who I was and I wanted to speak to the general counsel. I'm an investigator over at the Gigafactory in Reno, Sparks. Please call me back. I've got questions regarding lithium and shipments. Sent emails, nothing, never got. And then it was after that, after probably a week or so of no response, nobody's returning phone calls. And again, I was perplexed by why the hell I would talk to Tesla's general counsel regarding lithium. So that's when I took it upon myself, at the direction of my boss, to continue my investigation, to go back down to the warehouse. To go to the warehouse initially, and that's where this all transpired. And then subsequent to that, like I said, I was removed from the picture, and the equation was further targeted, and ultimately,
Carl,
the rest of it.
What was lithium used for?
So lithium is a primary component that created. They ultimately allowed for a product. I mean, you term super meth, right? It was a super high grade, real super methamphetamine, and the Sinaloa cartel was responsible for putting this together. And so what was being seen with cartels when this stuff came out was that they were going into battery locations. They were just stealing batteries, extracting lithium from batteries and different sources, and then there were issues tied to solar, and battery packs related to solar. And so that's what was going on with this, and that's why the lithium came on my radar, because I had also identified the drug trafficking organization. It was under investigation. I had 5 employees, members of this cartel, working at the Gigafactory during this time, and so it was very interesting. And so, with respect to the Panasonic stuff, prior to them finally really moving me totally off site. I was conducting a security patrol because I had been removed from investigations by this time, and I was going down into the A, B, C, D, and E areas of the Gigafactory, and I found millions of batteries, little battery cells that were over there. That were stored in areas still under construction in the Gigafactory, and I was approached by an engineer from Panasonic. Sorry, I say an engineer. I believe he was an engineer from Panasonic who said, hey, sir, because he saw my uniform, right? And he said, look, all these battery cells, we've got hot work here. This is all under construction. We got welders. I've told them, and we can't have this. They were worried about these lithium battery cells, and we're talking millions of them. So I started taking photographs of this, and then I went over to Panasonic's people, and I said, hey, because I knew an investigator that was hired over there, and I said, "What in the hell is going on with these battery pallets over here? They're all labeled rework, this, that, and the other thing." And I talked to an individual that was counting them, and he said that they were. He didn't really know, but he was told to count them and enter information in a computer, and they were going to send them to Tesla's recycling facility. And that had been the second time that I had heard from somebody with some credentials about a place called Tesla's recycling facility. This tied into the larger scale theft of copper and other things that were ongoing. And I had been told by a VP, or I'm sorry, a superintendent, yeah, I was going to Tesla's recycling facility. Well, Tesla didn't have a recycling facility. The only thing that came into play where we thought that there was more fraud was some type of behind the scenes operation with Redwood Materials, which, if you remember, J.B. Straubel created Redwood, right? Redwood opened shop in Carson City, Nevada, officially in August of 2018, all about the same time that I'm doing this, all these millions of battery cells. And then I was told that there was confrontation between a vice president for Panasonic, who was in charge of these cells and productions, and there were contract issues, and that they felt that Tesla was somehow defrauding a Panasonic with not meeting, goals. But again, that's not my wheelhouse. Okay, I don't have expertise in that. You asked what I was told, what I heard. Those are things.
Carl, I appreciate it. It's really helpful. But so let's go back to you, Motorhead. So Motorhead, can you contextualize everything Carl's saying in terms of the bigger picture? Because we've gone down a rabbit hole here, and I have to say as a side, I apologize to everyone in this room for the fact that I mistakenly let that Weber guy in here. What he's saying may be true, maybe it's not true. I don't know, but given a chance to try to get back on point and explain to the relevance of bigger fraud and whatever, and his inability to do so, and frankly, the depths to which he reveled in going into a lot of his personal stuff, I don't, frankly, there's a reason he's not in this room anymore. I frankly don't find him credible at all. So apologies to everyone in this room for having your time wasted with that guy. But anyway, Mr. Hansen knows what he's talking about. So Motorhead, I want to go to you because what I'm really interested in is not so much the personal aspect of this whole thing, but in terms of the culture of fraud. I see we have Jim Chanos in the room who coined the phrase legal fraud. I mean, some of this stuff, it's not legal fraud, it's illegal fraud. I mean, I've never seen such aggressive accounting in my life. How Tesla gets away with this is just beyond me. So Motorhead, could you give us some perspective on, your assessment of Tesla's accounting practices vis-a-vis all other automakers? What all the other automakers have told you how they view Tesla's accounting practices, and how do you think Tesla gets away with this, Motorhead?
So, well, I mean, the way Tesla gets away with it is because, there are no regulators who are willing to go after them, unfortunately. But listen, Weber and Carl Hansen's testimony, it was their personal experience, and let me just put everything into a nutshell. It all coincided with the December 2018 quarter. It was Q4 of 2018, and it coincides with Panasonic having made a huge jump in operating margins on their Tesla sales. And what it means is that there was a lot of dodgy stuff going on at that time, just like Carl said, and just like Weber said. And there's okay, there was the drug aspect of it, but I'm telling you right now, Panasonic said that long term, we will make 10% operating margins on our battery sales to Tesla. Now, I've been interviewing them since 2010, and what happened was when they were ramping up the Model 3, like I just said, is they were taking losses, and then all of a sudden they went from operating losses to like a 11% operating profit margin. I'm like, oh, isn't this great? And they're like, don't get too excited about it. I'm like, why? And they said it's because Tesla ordered too many battery cells from us and asked us to hold on to the inventory. So this is a huge fucking deal. I mean, when you're a an auto manufacturer and you order stuff, it goes into your raw materials, your inventory, and so
All right, all right, all right. So look,
it boosted. Let me just finish. It boosted cash flow by about $200 million. At that time, that was huge for them.
no, I get it. Okay, it's interesting, but let's just you know what? I'm going to reset the room right here because I want to apologize to everybody in this room. That guy Weber should have never been allowed in here in the first place. I've blocked him. I think he's full of shit. I think he was lying. I think he was just trying to grab attention for himself and has poisoned this room. So because of that, I'm going to we're going to change this from completely. We're not going to talk about Tesla anymore. We are done talking about Tesla. This is the reason why, for so long, a long period of time, there's certain things we try not to talk about in this room. One is crypto, the other is Tesla. And Motorhead, you did a great job, and I thank you for, your real tour de force. But that guy and Carl, I thank you as well. But that jackass Weber, I could use stronger terms than that. That guy is a self-aggrandizing, attention-seeking piece of garbage. And I don't believe a word he said. And I'm sorry anyone had to listen to that nonsense. I think he's a complete fraud. He is a complete fraud. And you know what? If he's got a problem, he can come back in this room and say it to my face. He can go pound sand as far as I'm concerned. I use the term bad actor. That guy's a bad actor. The hell with him. All right, so Motorhead, let's just get back on point. And maybe you can trigger Jim Chanos here. It'll come up. So the elevator pitch Motorhead on the short is you think deliveries they'll be lucky to $1.5 million next year, up from $1.3 million, which is only up 16%. The streets at $1.9 million. Streets at $17 billion in gap earnings for 2023. Hey Jim, I hope this will trigger you. You think it's going to be $5 billion? You think they could lose money?
Yep.
And your reaction to the space today was the same as mine. I mean, as I tweeted out, he's basically paving the way for a huge profits warning. And all of a sudden, he's become an expert on Fed policy and Jerome Powell. And whatever happened to we can sell as many cars as we need to. We just don't advertise. Here, I think we got him out of his cage, out of his cave. So, Mr. Chanos, welcome. Happy birthday, my friend. I don't know. I'm sorry you probably had to listen to some of the nonsense, but if you were in the room earlier, Motorhead was masterfully set as to why he thinks Tesla could lose money in 23. What do you say about that, Jim?
Well, I only stopped by to wish you a happy birthday, George. You're a day after me. So, and I'm on to my second Bloody Mary on my birthday. But so happy holidays, everybody. I didn't catch any. I just caught the last 10 minutes. So I apologize. But
yeah. So
look,
Jim, I'll just give the accelerated elevator pitch. Motorhead's like deliveries will be lucky to $1.5 million, only up 15% next year. He thinks prices are down 15%. He's got a $5 billion gap number for 23. He thinks they could lose money. We both equally view Musk's out of character Twitter space appearance and everything he said is paving the way for a huge profits warning in 23. That's the gist of it. What say you?
Well, you have to remember that what you need to focus on is China, because this company was unprofitable as late as 2019 until Shanghai ramped. And when Shanghai ramped, gross margins exploded from basically mid-teens to mid to high 20s. And if you obviously look at their 10K and even some of their disclosure in their 10Qs, it's very clear that all their money is made abroad, and we believe almost predominantly, if not entirely, in China. And so the demand problems in China are real. You saw the news today that they pulled forward the plant closing by a few days. Okay, whatever. But you also have to understand that selling $50,000 cars in China is the same as selling $200,000 cars here. It is a very small market, and based on income levels, and so once you get to backlog demand, and we know that that's been dropping for 6 months, incremental sales, despite the ramp of the Shanghai factory, are going to be increasingly difficult in that part of the world. Now, I don't think Berlin is going to be a profitable factory, and we know that the U.S. has not been profitable, even when Fremont maxed out by 2019. So all of the special sauce here is in China. That's where the cash flow is. That, whether or not it can be repatriated is questionable. And so on top of all of that, he's now facing, it looks like, demand slowdowns generally beyond China. And so, whether it was Dan Ives, I don't know if you saw my tweet yesterday, Super Bowl Dan Ives very quietly, cut his out year revenue numbers. He's got 16% growth in the fourth quarter next year versus this fourth quarter. And the sell side sees what we're talking about. Make no mistake about it. They're just trying to tiptoe the numbers down. And increasingly, it's going to be very, very hard to justify this. Tesla's growing at 40 to 50%. It's probably not going to happen in 2023. We're beginning to see number cuts, and with it, tell me that any technology company does well. I remember Dan Benton's crib sheet from 2000. You don't buy technology stocks when numbers are being cut. Tesla is still at 5 times revenues here, and numbers are being cut. And I don't think you need to know anything much more about the story. Other auto OEMs trade at 3 to 5 times gross profits. Tesla is still trading at, let's see, they're going to make about 20 billion in gross profits. Tesla's still at 20 times gross profits.
100%, Jim. Hey, Jim, could you just hammer home the point again that you've eloquently made so many times about the size of the luxury car market globally and where Tesla is now?
So prior to the pandemic, the luxury car market globally was about 2 million units. That was prior to the pandemic. It exploded, paradoxically, post-pandemic. And really the luxury car market, which is US dollars 50,000 and up, is about 4 million units globally right now, half of those in the US. That's your market. And that's, until Tesla gets a $25,000 or $30,000 car with bells and whistles, even the Model 3, pushes $50,000. And the Y and S and X are, of course, well above that. So this is an aspirational market. It is a much smaller market than people think. It's not infinite. And so, you get to 1.5 to 2 million units this year. And that's, by the way, that's not EV. That's all cars. You get to 1.5 to 2 million units, and you're talking 40 to 50% of the entire luxury car market. And at that point, law of large numbers kicks in and rate of change kicks in, and you don't keep growing at 40 or 50%. And that's where we are with Tesla in 2023. We're getting into the point where they've saturated the high-end market, and to their credit, right? That's why they're a $400 billion company. But when you have a growth multiple, you got to keep growing. And if you double, basically add to that lower margins and lower units, I mean, I don't know if they're going to lose money, but certainly trailing earnings right now through the trailing 12-month earnings through the third quarter, excluding regulatory credits, at a full 21% tax rate is $2.50. And so I think that this thing, if peak earnings are right around now, which very well could be, and by the way, those are peak earnings coming from China. What do you want to value that at? $120 is still expensive.
Hey, Jim, take that. And now you probably remember the old line from one of Soros's books where he talks about the way to really make money in the market is determine what it is the market believes it's actually not true.
Right.
And more importantly, figure out when the crowd is going to realize they've been had. Do you think we're finally in that awakening phase right now in Tesla?
Well, the variant perception, there's a couple of variant perceptions in Tesla. The one I think that is being deflated right now is that this will grow 40, 50%, for the next 5 to 7 years, right? That slowly but surely is dawning on people as numbers and deliveries get cut in the backlog. By the way, the book to bill now for the last 6 months has been, if the backlog numbers are accurate from some of the bulls, the book to bill is 0.50. So the 40 to 50% growth forever is what's taken the stock down in the last 6 months. But the real variant perception that we keep up on harping on that nobody's talking about is that all of the profits are coming from China. And that's a risk that, whatever you want to believe, you're not putting the same multiple on those profits as you should anything else. And I think that's the next realization, was just how profitable Shanghai is relative to Fremont, Berlin, and Austin. And that's going to be the next realization on a variant perception.
Jim,
Jim,
sorry, just
Motorhead, you go ahead. Motorhead,
thank you. No, I agree. The way they present it in their 10K, and they only do it once a year, and they did it for the first time in 2021, is to show domestic and international or overseas profit, right?
Yes.
But the thing is, you have to the thing that nobody understands, because like Tesla is like so bad with disclosure, is that that in the international profits, it includes Fremont's exports to Europe and to APAC. And so the thing is, if you redo all that stuff, it's actually, Fremont is actually at about 5% operating margin, which is not much, but yes, China is like huge for them. And the thing about China is that everyone, I'm out here in Asia, and everyone's bidding up the the Chinese stock market right now, because it's like, oh, reopening and everything and blah blah blah. But the point is the people I know on the ground in Shanghai and in Beijing, they're hurting. They don't have the money to go out and buy cars, which is why you've seen like 8 times in the past 6 weeks, you've seen Tesla give incentives for their cars.
Right.
And the thing is, once Berlin ramps up, because 40% of the Shanghai factory is shipping cars to Europe. Once Berlin ramps up, and they have to ramp up Berlin, otherwise they're going to have huge losses. And once Berlin ramps up, Shanghai is going to be lost in the dust, and there's no demand in China right now.
Well, I mean, if you're a Tesla bear, the thing you want them to be doing is to be opening new factories and into this. But in fact, they should have announced a new gigafactory by the end of the year. All they've announced is a production assembly facility in northern Mexico.
Well, so by the way, sorry, this Mexico facility is a way to help out what's going to be a total collapse in China, because what they're going to do, they can't ship cars from China because the U.S. Have 28% tariff on imported cars from China.
Yep.
So what they're going to do is they're going to ship it to Mexico, which has no tariffs, and they're going to assemble kits from China and then ship it to the U.S. But that's going to be a massive drop in gross margins.
But then the question will be components and whether that qualifies for the full tax credit, and so there's lots of issues here. But again, George put his finger on the pulse. If the entire luxury car market, 50,000 and up, is 4 million units globally, you get to 1.5 to 2, your rate of change of growth is going to slow dramatically no matter what. And that's the reality that Tesla's facing. And you just can't grow that market at 40 or 50% per annum, ad infinitum. And so that's what the market has begun to figure out. And that's what we're seeing with the backlog numbers. And now the question will be, what kind of multiple do you put on a profit stream coming out of Shanghai? And can you repatriate it?
So, Jim, let me ask you a question. You're the one who coined the phrase legal fraud. I think most of us in the room.
No, Bethany McLean. That's Bethany.
Okay, sorry, I stand corrected. So I think Tesla qualifies. It's very relevant for Tesla. Could you speak a little bit for the folks to understand? Let us count the ways in which Tesla engages in aggressive accounting.
Well, I mean, look. First of all, as another good commentator, Jim Grant, said, China is the People's Republic of Madoff, and so any numbers coming out of China are suspect, and virtually every large company and small company we've looked at China, we could point to things in the financial statements that didn't make any sense. And that's still by and large the case. And so if you're telling me that all of your profits are derived from the Shanghai factory, or virtually all your profits are derived from the Shanghai factory, that's going to be the first red flag for me. And number one. But I mean, we can go back to all kinds of things in terms of Tesla's accounts, but forget all that. I mean, you have a CEO who runs everything literally with an iron fist at this company, with virtually no board oversight, who has a very challenged relationship with the truth. I mean, just look at his statements down through the years, down through the weeks, down through the days. He literally, stuff he says, and people will say, well, that's Elon, right? He's a visionary, whatever. But none of us in our businesses, none of us have the ability to lie repeatedly, no matter what our track record is in business or finance, right? You can't simply tell whoppers over and over and over again and then default on the fact that, yeah, but I have a really good track record. But he does. And I think that should give any investor pause as to, if you just have a really challenged relationship with the truth in your day-to-day life, well, then, I don't believe any of your numbers.
Yeah,
Who knows what's going on?
Jim, 100%, 100%. So I don't know if you listened to or read about the space that Musk appeared in on Thursday. And what was really interesting, more interesting than what he said, was what he didn't say. When he starts going on about, Jerome Powell and his opinion of Fed policy and this
Yeah.
and everything, and then in the next breath he's talking about, well, we may have to drop prices to grow and this, that, and everything, and then going back to
So I didn't listen, but one of my analysts did, and so the simple response to that is, oh, so what you're telling us is you're cyclical. Again, gets back to, are you a secular growth company, or are you subject to interest rates now and the economic cycle? Because that's certainly what you just said.
100%.
So again, I'm not going to pay 20 times gross profits for that.
Yeah. So you start putting on anything like a norm. I mean, it's an auto company after all, and you put. I mean, who knows if they're going to lose numbers? But Motorhead, your $5 billion number is what? Is what, $1.50 a share or something like that for next year?
Sorry, I don't. I mean, I'm not into these adjusted.
All right. Okay. Well, it's got a 390 billion.
40%.
Yeah, 390 billion market cap, and you've got a $5 billion earnings estimate, $5 billion earnings guesstimate.
So I predict. I mean, I might be wrong, and I've always been wrong on Tesla because of whatever. But I think there will be a headline sometime next year where they say that Tesla is now a lower market cap than Toyota.
Right. And Motorhead, could you share with us in your conversations with the Japanese auto companies? Because I know you just said you saw Subaru and some of the other ones. When you talk to them about Tesla, what do you hear from them? What do they say about Tesla?
They don't like to. They love hearing about it, so they don't ask me about Tesla. But when I asked them, I'm like, so I talked to Subaru yesterday, and I said, Tesla's like making big offers like for year end and all that stuff. And the interesting thing is that Subaru is like still raising prices. And the thing that the Tesla bulls love to say is that, Legacy is going to get, go bankrupt and whatnot. But the thing is, Subaru is still raising prices.
Yeah.
They've just lowered the loans. And the thing to ask automakers right now, and this is the main reason why you've got order cancellations at Tesla, is that people who buy cars on loans can't afford it. And that's why you've got order cancellations at Tesla.
So Motorhead, could you, and Jim, I think it's a really interesting point that Motorhead has. So Motorhead, could you go back to your point about how falling, how Tesla's going to be differentially impacted in a negative way because of the fact they have a dealer they don't have a dealer network and the legacy guys do. I think it's a point that Jim probably knows about or be interested to hear about. So Motorhead, could you please repeat that point?
Yeah. So it's back when I when I wrote this report in at the end of June. But the point is I spoke to all the automakers in Japan, and they all said that chip supply is coming back. And when chip supply comes back, that means they can produce more. And so they were all like saying, yeah, we're, it's like better than expected. And I said, okay, but if you guys like produce more, your prices are going to come down. And I said, how is that going to, impact, profits? And they said, oh, it's not a big deal. I'm like, what are you talking about? If prices come down 10% because inventory goes up, 20%. And they said actually, because they have dealerships, they said actually it's the dealers who have to take the price cuts, because the dealerships actually have price gouged more than anybody else in the market during the chip crisis. And the point is that they said basically that if our unit production goes up by 10% and our prices go down by 10%, we will still make profits because our unit production goes up and the dealers take the hit. Tesla has a direct sales system, so they pocketed all of the 27% price hikes that they made up to now since COVID. And when the competition starts to lower prices, which they're happy to do, because they make more money on unit volumes going up, Tesla's going to get screwed.
George, I have to leave you. I've got a Zoom birthday call with my kids who don't live in New York, so at 4:00. So listen, I want to wish everybody on this a really happy holiday, and George, a special thanks for doing these. These are always terrific, and when I do have time, I always try to stop by. So everybody have a great holiday, and all the best, and happy and healthy 2023.
Thanks, James. See you around. Take care, man. Be good. Be good. Let's go to Deer Point, and then William. Hey, Deer Point, what's up?
Hey, George. Thanks for having me up. And just a question. It actually goes back to that same space call that Musk was on a couple of days ago, bragging about how they have the highest gross margins in the industry. And I'm sure Motorhead might watch this more than I do. But if, like, with under provisioning for warranties, and also the fact that they don't include R&D and gross margin, um, doesn't that actually end up inflating all of their gross margin numbers by like a pretty substantial amount? I think what just in the way that they calculate their warranty provisioning, that adds hundreds of $1 million or hundreds of millions of dollars to income. So this whole idea of him sitting there bragging that he has better margins than gross margins than Ford or Chevy or BMW, just seems like just a complete farce. But I'm not sure.
Yeah, no. Deer Point, 100%. I mean, for those of us that watch Tesla carefully, this has been a well-known lie, if you will, or aggressive accounting. If you actually look at their warranty provisions versus subsequent expenses, it's comical. It's pathetic how bad it's been. Motorhead, do you want to weigh in on the particular numbers?
Yeah, so I don't like looking at gross margins because, like, across the world, I mean, the biggest, so I cover Toyota, I cover Volkswagen, all those guys, and none of those guys book R&D at the gross margin level. The only car makers who do it are in the U.S. It's Ford and GM. So I don't give a shit about gross margins. It's like, if you were to normalize Tesla's gross margins on a global basis, they're not that high. In fact, in some cases, in some quarters, GM was actually higher than they were. So I don't look at that. I look at pre-tax margins, because that's the most important point. It's not only a point of how much money you spend on white collar workers and line workers. It also shows how well you manage your financial position, because you've got and interest expenses and interest income coming in there. So that's.
But thanks, Motorhead. All right, listen, guys. I want to get this conversation away from Tesla. to things other like the market. I don't want really any more Tesla questions. Anyone's welcome to come up on stage, but I think we've beaten Tesla to death, and there's not much more to be said. Just to be very clear, to summarize, Motorhead is pointing out that he thinks their deliveries are likely only to grow 16% from 1.3 to 1.5 next year, not the 1.9. Consensus estimates are 17 billion in GAAP earnings next year. He's going for 5 billion. It's possible they're going to make a loss. Jim Chanos pointed out how they're getting all their earnings and then some from China. That's really low quality stuff. It's an incredibly competitive market. Motorhead pointed out how differentially Tesla's going to be disadvantaged by normalizing supply chains and collapsing semiconductor prices. So, again, sell is not a four-letter word. I don't think there's really anything more to say about it. I don't want any more questions about Tesla. So you're welcome to, anyone's welcome to come up on stage. I'd like to turn the room to other things. So let's go to William. If you have a question, please, the floor is yours, and then we're going to go to Glow. William, Glow, and then Sheldon. William, please unmute yourself.
Perfect. Thanks, George. Yeah, I wanted to comment actually on the market as a whole and on Fed policy. By the way, I saw you were at Fidelity. I don't know if you know Jeff Ubben or if you overlapped with him at all.
Yeah, I certainly I know Jeff, and he came a few years behind me. Smart guy, very successful guy, did an incredible job with the value add. Yes, I do.
Awesome. Yeah, I worked for him very briefly. He's still someone I stay in touch with, so it's great to connect with you as well. But the point I wanted to make and question I wanted to ask was a lot of fund managers, Cathie Wood, Elon Musk, Ron Barron have made this point repeatedly that the Fed has gone too far, too fast. We're already in a state of deflation in their eyes, and that repeated rate hikes from here will put us in a very, very severe recession, probably more than is necessary to curb the inflation that we're seeing. And that 2023, even if the Fed pause the rate hikes or, in their view, cut sooner rather than later, that would be enough to handle the inflation we're seeing. I think Elon made that point a few nights ago on Twitter Spaces as well. My view, and I'd love to get everybody else's view, is given the history of the 80s and Arthur Burns, and the fact that Arthur Burns was seen as somebody who was unable to tame inflation expectations because of his stop and go Fed policy, is that if you cut sooner rather than later, you risk the same thing of inflation becoming basically embedded into the system. But with that said, obviously the yield curve is so heavily inverted that there is a point at which you do start to run the risk of entering some sort of depression or a recession, which is going to do substantial damage. So would love anybody's thoughts in the room on that. I'm obviously don't have a background as an economist or anything of the sort. I'm a fundamental investor, but would love anybody's thoughts on that.
I'll answer that question, and I'd like to move on to another question. We've spoken a lot about this. This is top of mind for most people. So right now, I mean, if you go back to the beginning of the year, this time a year ago, I think the forecast for Fed funds rates 1 year forward, like today, I think it was the Fed funds rate, I think, was at 50 basis. The short-term rates were 50 basis points then. And the idea in the long bond was yielding 1.5. So we got Michael Kramer in the house, so he can speak to this. Long bond was yielding 1.5, and the idea was, oh my God, if rates go up, it can't go up more than 1%, because if they do, the whole world's going to blow up. It's going to be levered. Everyone's levered. Yada yada yada. The idea that rates could have gone up as much as they have, and the world hasn't blown up, no one would have believed that. The fact of the matter is, people like Jerome Powell, the Fed, Cathie Wood, Ron Barron, they'd be completely wrong in their view on interest rates and inflation. First, inflation was transitory. Then it was peaking already in the spring. I mean, it's just they keep moving the goalposts, and now they say it's going to go down to 2%. Why would you believe these people? They've been so wrong the entire way through the whole thing. The fact of the matter is, wage gains are still accelerating. The average wage gains are like 6 or 7% right now. And the gap between those quitting their jobs and leaving their jobs is around 2%. Yes, goods inflation is coming off the boil, but services inflation is still accelerating. And if you look at the index of sticky inflation, it still is extremely high. The market has assumed that, they say, well, long-term inflation expectations remain well anchored. Just look at tips and all this other nonsense. Well, just because those are the expectations doesn't mean that's what's going to happen. The market has already taken on board the idea that inflation is going to go back to 2% by the end of the year, by the end of next year. I don't believe that. But even if I'm wrong, it doesn't really matter. The market believes it's already in the price. So we had the great Vincent Deluard in this room about a month ago. I urge everyone to go look at my YouTube channel. He's there listening to him. All I can do is channel my inner Vincent. And he makes a very good point. To understand where we're going with respect to inflation, you have to have proper context, i.e., understand how we got here. How did we get here? And it was three factors of cheap labor, cheap goods, and cheap energy, which gave us the great moderation. And all those factors have stopped or now reversed. Cheap energy, no more. Cheap goods, we have deglobalization of supply chains, onshoring, ESG, all inflationary. Cheap labor. China now has a declining labor force. We have run out of labor in this country. We had 7 million people leave the labor force. They're not coming back. And so if you look back, and I think Jim Bianco's made this point, you go back coming out of the great financial crisis, the market consistently overestimated inflation and interest rates. And therefore, if you bought bonds every year, you made money because inflation and rates came in. You wanted to take the under on inflation and interest rates. Going forward, I think it's likely to be exactly the opposite. The idea that inflation is going to come down to 2%, not happening, in my opinion. We'll be lucky to get it down to 4%. Vincent was making the case that maybe they just get it down to 4% and they see how impossible it is to go any further. And come the spring, when it cuts down to 4%, they'll just give up. And if that's the case, they'll say mission accomplished, and they'll stop the QT. And if that's the case, think about what that means for bond prices. The 10-year at 370. I would short bonds right here, right now. I would short bonds right here, right now. I'm not short bonds. I think they're better games to play, such as, for instance, any long duration, high PE, loss-making piece of garbage that's levered to the long bond, Cathie Wood type stocks. Yes, I'm talking about Cathie Wood and Ron Barron, talking their books. Those things are completely screwed. And so I think, this idea that the rates are coming down further, I'm just not a buyer of that. And so coming back to the bond point, if inflation is going to be 3-4 going forward instead of 2, the 10-year at 370 is not particularly attractive to sale. You combine that with the earnings recession that we're in. We already are in. Forget about economic recession, but the earnings recession that we already are in, equities continue to represent return-free risk, as I've been saying all year. And I think we've got a sub 3,000 S&P in our future. So I hope that answers your question.
That was a master class. Thanks so much, George. Happy holidays, and thanks for hosting the room.
Thank you. I want to go to Glow and Sheldon, and then I don't know where we are. We're all over the place here. Let's do Glow and then Sheldon. Glow, the floor is yours.
George, as always, thank you for a fantastic Spaces session. It's been great learning, and don't worry about that Weber guy. That was garbage. We agree. I'm just wondering if I can touch on what's being talked about with bonds and inflation here real quick with some data.
Go for it.
One thing I like to look at, and this is from Jeff Gunlack, is the relationship between the 10-year and 30-year yield. So yields are looking exhausted here and kind of calling, the Fed's bluff that they can't keep hiking. And to your point about average earnings, that's a great point. Over the last 3 months annualized, we're looking at over 6% is the earnings growth. So that translates into core PCE staying high, right? And the 2%, we can forget about that. They're going to move the goalposts, but it takes the better part of a decade to get inflation down to 2%. And the Fed is known to start easing up on the gas pedal after a 1 to 1.5% decrease from peak inflation. So it's going to be a very interesting year or years ahead, I guess we could say.
Agree with that completely. I think as opposed to the past, we had the great moderation and number always go up. I think you're looking at an environment of more stop-go, more economic volatility, stickier inflation, a bear market in earnings. It all adds up to lower PEs, which just contributes to my sort of dour outlook for markets generally. Thanks for the question, Glow. Let's go to Sheldon. Sheldon, please unmute yourself.
Hey, George. You just talked about energy as like cheap energy is one of the sort of three things that have sort of gotten us to where we were before inflation took off. I was wondering if we could dig a little bit on U.S. shale and sort of. I was wondering sort of how you felt. Obviously profits and buybacks and everything have gotten these share prices sky high, but I was sort of looking at some of these charts, thinking, especially things like Oxy. They've sort of dropped under the 30-week, and I don't know, a lot of people talking about maybe that there might be more declines ahead for U.S. shale output than the market might be pricing. I was wondering if you had any opinions sort of on the future of U.S. shale.
Yeah, I mean, it hasn't been top of mind lately, but I've spent a lot of time on this in the past. The energy price, it's kind of interesting. The energy price has been, oil's been doing horribly since its peak back in June. And the stocks have actually held up remarkably well, all things considered.
Right, yeah.
It's just kind of funny when everyone expects something to happen. I mean, we had John Roque talking about this and somebody else. We had John telling me a few weeks ago. He went to London 2 or 3 months back. Everyone's all built up energy stocks, but they all have the same story. Oh, they're going to stop anything the SPR. Oh, China's going to reopen. Oh, Russian exports. The ban on is going to go in, et cetera, et cetera. Those are all the sort of elevator talking points, and somehow in the way of the bank, it didn't quite work out that way. And I don't really know. I mean, forecasting oil prices is a fool's errand, but people seem to think that the slowdown we've had in China has played a major role in all this, and so it's a question of multiple time frames: short term, long term. Long term, I fully subscribe to the bullish view on energy stocks, but short run, not so sure. I got on my energy names for the most part back in June. I've kind of been schizophrenic. I come in, I go out, but I don't trust it. I don't trust it because if we're looking at a big economic slowdown, that's not good for energy stocks. But again, it depends. It's multiple time frames. I mean, so short term, don't know. Scratch my head. I'm not long. I'm not short. I'm just not involved. Longer term, I am bullish. I mean, what's your perspective? You like them? Don't like them?
Well, there was this like banner headline thing in an energy aspects report not too long ago that said something to the effect of, is U.S. shale going to peak sooner, sort of, than everyone thinks? And I read something else yesterday that was pretty interesting about, this not wise well placement and sort of that have people been sort of fibbing about the decline rates of some of these wells, especially not in the Permian. That's been outperforming, but the rest of the basins
No,
have been looking pretty poor.
Yeah, Sheldon, no, you're right on that. I mean, the great Mike Rothman is one of the best oil guys out there. Has been warning about the believes that we're in the twilight for shale. I agree with that, but U.S. energy production actually hasn't been doing too shabbily. So
Right.
Sheldon, I would just hold that question for another space. I mean, there are a lot of energy specific spaces. A lot of my friends from the Canadian Oil Mafia are in here. Maybe some of them want to come up and talk about that. That's fine. But I would just hold that question. I'd like to move
Sure.
on to something else if you don't mind.
Thanks.
All right. I want to go to Michael Kramer, and then I want to do Rob Isbitz. Hey, Michael, good to see you. What's on your mind, my friend?
Oh, I was just dropping in to see what was happening today. I saw you doing a Spaces, and I didn't think you were doing it all day long. So, but I was just listening a little bit to your inflation story and economic slowdown story, and the thing that I've been thinking more about where we're maybe going is more of a stagflationary sort of environment next year, and not necessarily recession. And I tend to agree. Inflation is going to be elevated for some time, but we also have, very high, strong nominal GDP growth. And so recession, it speaks more of a stagflationary environment, I think.
Yeah, that makes a lot of sense. I would tend to agree with that. And, it's funny when it was Bob Farrell who's or a Merrill technician was saying famously when everyone expects something to happen, something else is going to happen. And I think you said it the other day, I had the conversation, forget a recession. If we get a recession, it'd be one of those most widely advertised recessions in history.
I lost it.
Yeah, Michael, you still there? Can you hear me? Michael? Hello? Michael, please unmute yourself. I guess we lost him. All right, let's go to Rob, and then the car. Yeah, Michael, you going in and out? Can you hear us? Michael, you're in the matrix. Michael, if you can hear us, leave the room and come back, Michael. Hey, Rob, what's up, man?
Hey, George, you can hear me, right?
We got you.
Okay, good. So, first of all, happy birthday, and thank you for kind of starting me down the path of convincing my wife we should visit Aruba sometime. Um, and I guess there's a few things on my mind. I'll just rattle them off quickly here, and look to maybe generate some discussion. And this goes back to a lot of stuff that Tommy and you were talking about earlier today. Um, so first of all, I mean, to me, 2022 has been characterized by a lot of investor arrogance, a lot of it on the part of the retail, but and maybe the less tenured investors, and that's okay. But like you said earlier, you kind of have to learn from it. Emmitt Smith, the great running back, had a quote that was actually I think attributed to his dad. He said, "Hey, when you get to the end zone, act like you've been there before." And hopefully, the football fans know what that means. If not, I can explain. Um, to me, and I've written a lot about this in Seeking Alpha and stuff, but when it comes to the stock market, it still seems to me that especially retail investors, they're not taking it seriously. And then there's the other end of the spectrum where there's people that are, they lose 5% and they're freaking out. I think there's a lot of misplacement, and I thank goodness that these spaces are helping to kind of bridge the gap between we who have been in this for decades and are fairly humble about it, and a lot of these sort of newbie arrogance that comes along. Last point I want to make um, is on the bonds. Okay, I mean, I've been a bond bear for a long time, and I'm a chartist for a long time. The market tells us a story. We just need to listen, and we've heard on these spaces and elsewhere about lack of liquidity. The Fed kind of urgent to extinguish this era of investor speculation and other BS that we haven't seen the likes of since 2000, even though they kind of caused it. And I think the irony going into next year is that a lot of people are just automatically saying, "Hey, bonds are stocks are a mess. That's okay because you can buy bonds." And on the Cartoon Network and all that, it's about buy bonds, buy bonds, buy bonds. I'm with you. My charts are saying to me, it's never 100%, but they're saying loud and clear that bonds are much more likely a short than a long. And just for the folks who may not be as, let's say, ETF obsessed as I am with some of the work that I do in the portfolios I run, there's a trio of ETFs that short the bond market. TBF shorts very long bonds. TBX shorts 7 to 10 year. SJB, I like to refer to, since I used to be one, as single Jewish boy, SJB, is also that shorts the high yield market. So you don't have to get that fancy. These are single inverse ETFs, and this is not investment recommendation or advice. I'm just saying between that and the other ways that we talked about SARC on here and PSQSH. I mean, there's a lot of ways to express and profit from your bearish opinions. And I just hope that in 2023, carrying over from 2022, because I agree with you, I think 2023 could be like 2001. 2000 was bad enough. 2001 was even worse, and 2002 was even worse than that until early 03. And so anyway, I wanted to put a few of those things out there, put it against the wall, see what sticks, and get your reaction and anybody else's.
Rob, that's phenomenal. I'm with you, and as you and I discussed, and you agree, time kills more people than price. When you go back to like 2000, bear market, no, it just went on and on and on. And I think the real thing that would mess with people is if bonds actually went down again next year. I mean, I'm of a very strong opinion. I could be wrong. Wouldn't be the first time. Won't be the last time. There's no doubt in my mind that equities are going down in a big way in 2023. And we're going to get Carter up here in a second, and Michael Kramer's going to come back we're going to let him go again. He's coming back from the Matrix. But I'm convinced equities are going down in a big way next year. They're overvalued. Earnings are falling apart. The public hasn't sold anything. And you're looking at a big earnings recession, if not outright recession. But the real poke in the eye would be you get a declining equity market, and you don't get any respite from the bond market. Like, how's that? Try that one on. Put that in your dividend discount model and tell me what you think. So,
It hasn't gotten emotional yet, has it?
yeah,
Right?
no, not at all, Rob. Not at all, Rob. And so, I think the best thing we can do, Rob, is just be in these spaces, twice a week and talk with each other, do a body check, reality check. I love your line. The market tells you a story. You just need to listen. I think that's spot on. So I'm with you, Rob, 100%. But you know what? I want to hear other people. I want to bring the Carter in here because he's a really sharp cookie. And Michael Kramer, after Carter's done talking, if you're back from the Matrix, I don't know, your connection got all screwed up. We're going to go back to Michael Kramer. But the Carter, good to see you, my friend. What are you thinking?
Hey, George. Hey, sorry, there are a couple kids in the background. There's a little background noise. I'll keep it short and sweet. I would say the biggest takeaway from this last week was the Tepper interview. Not just because you have another big investor sort of confirming the bearish outlook, but I think it has pretty big implications from a flows and positioning perspective. He talked about the Fed put being 1,000 to 1,500 points below current levels, so that's 23 to 2,800 on the S&P. Whales follow. I think I said this in a space yesterday. Whales follow whales. The fact he's thinking that means there's hundreds of billions of dollars with that view now, and they're going to be selling rallies, and they're not going to be buying in size for a long time to lower levels. So on top of this very hard stop on the market at the top with this Fed call in place, you now have the whales sort of solidifying that Fed call. So I think the risk reward on an equity index short just got the risk reward just went through the roof to me in the last week. Obviously, options markets and zero DTE is going to mess with things in the short term, but the risk reward is outrageous right now. And I think the more that view is, the more I'm wrong in the short term, the more right I will be, and other bears will be longer term, because they'll just keep hiking. The longer the market stays up here, they'll keep just grinding 50s until they get up to 600 to 700 basis points on Fed funds. So that's my biggest takeaway from the week, I would say.
Appreciate that, Carter. So the year end's always tricky. Markets get less liquid. I think the longer you go out, the more confidence you can have in your forecast. But I'm going to ask you the question anyway, and then I'm going to go to Michael Kramer in a second. But, the way I've been looking at it, I think we talked about this in the room a couple of weeks ago, if the market were to take a dirt nap, there's no one there to stand up to it. No one's going to take risk here at year end defending the market. And that seems pretty much to be the case. The market's just been grinding down every day. In particular, the crap's been grinding. I'm going to ask you an unfair question. Do you have any particularly strong? I mean, clearly, I agree with you the longer, intermediate, longer term view. But do you have any particular views to the next couple of weeks before and after the turn of the year?
Before the end of the year, you have this stupid 38, 35 JPM hedge fund strike that seems to be pinning the market. I don't even understand how that works, frankly. I don't see how one fund can pin the entire market. But once you get beyond that, every single indicator points down in the next 4 to 12 weeks. So I think you get down to the 3,000 to 3,300 level in the first quarter. I hate Kathy Wood. I hate all that stuff, but I think you get a big tactical trading opportunity in that in the first quarter. I think everything just blows up here, and I don't care if I'm wrong. That just means interest rates go higher and that stuff goes lower eventually. But all the indicators, and you can just go through my Twitter feed. I've written about this a lot. All the indicators line up for that first quarter puke and all of that stuff. And you see I agree with you on rates. Rates now seem to be rebasing and moving higher. So I think if you get tens up to new highs or touching the highs, that would lead to that 3,000 to 3,300 level. So no idea in the next 5 trading days, but very, very confident in the next 4 to 12 weeks.
Appreciate that, Carter. Please, love your insights. Please stay on stage. I'm sure you'll have some questions. I want to go back to Michael Kramer, who's going to rejoin us from the Matrix, and then we're going to have Deer Point with a follow up. So, Mr. Kramer, you've been really, really right this year, and you've gotten a lot of followers, deservedly so. Everyone, by the way, follow Carter, follow Michael Kramer. Doesn't get them all right, but he sure had more wins than losses. And so, Michael, I know we got screwed up there for a week or two, but we've now gone back to our regularly scheduled program. And you and I spoke about a week ago. You've been very good about outlining Fed liquidity and the balance sheet and the reserve repo and all that kind of stuff. So, Michael, what are your present views right now, Michael?
So, two things I wanted to just bring up, just as you guys were talking, I thought about. So, just want to bring everyone's attention that the inflation swaps market is basically viewing currently that we see a 2% CPI sometime by May or June. I also want to point out that in December of 2021, the inflation swaps market saw a CPI at 3.5% by December of 2022. So obviously that's not going to be right. And so the market has been continually betting that inflation was going to come down at a consistent pace, and that just hasn't been the case. So the market's been consistently wrong. That's the first point I wanted to mention. The second point is that you are seeing rates breaking out around the world right now. German 2-year new high, German 10-year new high, Italian 10, Italian 2. And then, of course, you had the BOJ basically reset the entire yield market by unpinning the 10-year JGB from the 25 basis point mark up to 50. The whole 10 years across Europe, US, you never would, by looking at a spread between a US 10 and a JGB 10, you would never know anything even happened because the JGBs went up, US 10 years went up right with them, right? And if you look at these charts, I post them on my Twitter feed all the time. These rates are all breaking out, and the U.S. rates are right behind them. And the U.S. rates are going to be dragged higher because these spreads are collapsing right now. And it tells you that either rates in the U.S. are too low and need to go higher, or rates overseas are too high and need to come down. Being the positioning of the ECB, which is going to be higher than what everyone thought, I think it's more likely that U.S. rates get dragged higher. Not to mention the Fed is telling you they're going to go to 510. Fed fund futures are at 460 or 450 even for the December contract, which is just, so you have a disconnect, right? You could see the 2-year probably go up to around 5% in the not too distant future, and probably see the 10-year go back to 4.25 to 4.5, based off of where these spreads are, based off of what's happening around the world. In terms of what I'm seeing in terms of liquidity, so this week, reserve balances fell back to 3.05 trillion. That was about a $1.5 billion decline from last week. This was mostly due to the TGA rising by about $100 billion. Not exactly sure what's going on there. It seems like they were letting it run down, but I guess they're trying to keep it around the 400 billion mark. Going into the end of the year, typically going into the end of quarter to begin with, you always see reverse repo activity sort of surge. And so I'm thinking that maybe we see reverse repo activity get back up to 2.3 or 2.4 trillion over the next this week from its current 2.2, 2.25 trillion, which means you may have another 150, $200 billion worth of reserves get drained out of the system just this week, which could carry into this week into next. And so regarding the JP Morgan collar at 38.35, that's been sort of keeping a lid on the market more than it's been really sort of pushing it to the downside. So I think like if we do get a liquidity drain, I don't think the JP Morgan collar will matter much because remember, JP Morgan sold those calls, right? They bought the puts down below, but they sold the 38.35 calls. That means your market makers are basically long calls, which means they have to short the market to keep, stay hedged. And JP Morgan needs those calls really to finish below 38.35 to have them expire worthless. So I don't know. The way I'm sort of thinking about it, I don't think this sell-off is over yet. And I think that you could actually see a pretty meaningful sell-off between now and the beginning of next year, first week or two. But then I think you probably get a very big rally back off of those lows sometime in the middle of January to beginning of February. And that's what I'm sort of thinking about at this point.
That's great. That's great, Michael. And again, I urge everyone to follow Michael on Twitter. He also has a research service, really, really good value, and he's been spot on. He's one of the key guys that I follow. So Michael, I'm really glad you come back in this space, and I hope you'll continue to do so. And please stay on stage. I'm sure you're going to have a bunch of questions. I want to do Deer Point for a quick follow up, and then we're going to go to Ken. Deer Point.
Yeah, George, just actually, this is for you because, given the fund that you ran back in the day, the Emerging Markets Fund, what do you think about some of the emerging markets? I mean, you look at places like Poland, you look at places like Chile, Malaysia. Um, I guess Israel would be more of a frontier market, more so than an emerging market at this point. But I mean, you look at some of these markets. I mean, do you not think that some of these evaluations in some of these places, I'm not sure if you still watch them, but are also a decent place to kind of look, just given what's happening in the U.S. Like, yeah, I mean, you look at Brazil, inflation's coming down at a rapid pace. I mean, they front ran in terms of, hiking interest rates like most emerging markets have to do. So it seems like some of these places might be more better positioned from a monetary standpoint going forward, but I'm not sure if you have any thoughts on that.
Thanks for that, Deer Point. Yeah, it's a very good question. And emerging markets are a much more heterogeneous lot than they used to be. So I think you really need to take it on a case by case basis. I would say two things. One, rates coming down, the dollar weakening is a huge net positive, all else equal for emerging markets. But two, if we're going into a global recession, that's not a positive. So I think you need to be very careful. The EEM, for people who use it as a proxy for emerging markets, it's more dominated by China and some large cap tech stocks all around the world. So it's not a good index to look at. Brazil, you referenced, largely more commodity dependent. I think you have to pick your spots, and so it's very nuanced. And you asked really a question, dear. I think maybe we should have that as a topic for another space, because you really got into the weeds on this one. So thanks for the question. Let's go to Ken. Ken, good to see you, my friend. What's up? Ken, please unmute yourself.
Hey, George, can you hear me?
We got you.
All right. Well, hey, thanks for the call. A couple of quick points I wanted to make. Just at the first of the call, you were talking to Tom Thornton and talking a little bit about the tone of everything in the spaces and everything. And I just want you to know that 100 to 1 is where the positive stuff coming out of these spaces are to the negative. So there are so many people this year that have really felt left out of the whole system prior to, and have been included in here. And I really have loved the way this community has really lifted everything up and shared with each other. And I think it's been monumental, and I don't want you to forget that. Um, one other thing I wanted to mention was, I think we're all in such, I know I am, like I'm searching for something to give my clients hope for 2023. Because, people are tired of losing money. They're tired of not making money. And, we're all trying to search for that hope. But I think everyone's rushing too fast to try to find the promised land, because, bonds have to get ready before stocks. And until 2 out of 3 people on the internet are trying to make sure they don't miss the bottom, then we're not anywhere close to the bottom. I don't really have a great financial background, but I have a great common sense background. I've been doing this for 28 years, and over, you see people rushing to head the wrong direction. So I just wanted to make those points.
Thanks for that, Ken. I think those are really, really excellent points. And I value your value as a friend. It's great to get to know you this year. I love your contributions, and I think perspective and some sense of financial history is so important, and you bring that to the table. Unfortunately, there are too many new investors who've only entered the market in the post-GFC environment, and they think this is normal, and as we all know, it's not normal. So I salute you, Ken. I thank you, and it's a pleasure to know you. And please stay on stage. I'm sure there'll be some follow-up questions. All right, let's go to uninformed investor, who I'm sure is informed. Uninformed investor, please unmute yourself. Uninformed investor, you there? Please unmute yourself. I think you're muted. All right. Who else has a question up here? Glow, did you have a follow-up?
I guess, George, the follow-up would be like, what is the asset class other than cash and just sit tight for deflation? I mean, I know we got inverse ETFs and stuff, but how does one play what comes next, I guess, which is what most people want to know, right? We're all here to make money.
Yeah, and as you can imagine, that's sort of the first time someone's asked that question. And so when someone says, "Oh, I got to put money to work," I hate that phrase. I got to put money to work. Who says? How about cash as an offensive asset allocation decision? If you can make 4.75 or 5% in 3-month money, like, you think the market's going to be better than that this year? I don't think Ken does. I don't think Michael does. I don't think Ron Isbitz does. I don't think the Carter does. And so certainly David Tepper doesn't. So I just think we're in the everything bull market. We're in the everything bear market. I don't think it's much more complicated than that. And I just, as someone said, I can't remember, was Stan Weinstein who said it some months ago. We repeated it a million times in this room, but my dementia's getting the better of me. The hardest thing in a bull market is to stay invested, to stay in. The hardest thing in a bear market is to stay out. And that's my 2 cents. Yeah, it's a market of stocks. There'll be selected sectors you can do right in. But, unless you owned energy, you lost money this year. And so as we sit here right now today, I would just to say discretion is a better part of valor. Check back, maybe if the market tanks to 3,000 like Carter and Kramer thinks is going to happen in the first quarter, time to get back in. But right here, right now, no way. Thanks for your question, Bob.
George, may I pipe in for a sec?
Please go for it.
Yep, thanks. I'm gonna use that political debate rule since my name wasn't invoked, but the inverse ETFs were. Look, I think one of the things I'm thinking about in kind of wrapping up 22, looking into 23, is this. Sometimes, and I think George, you've mentioned this a million times, as have many of your speaker guests. You kind of have to draw back a little bit, kind of take that, 20,000 foot view and say, okay, so what do we have? Everybody's trying so hard to find the stock, the sector, the industry, the ETF, and again, I go back to the year 2000 where I believe it was utilities and staples and REITs worked for a while, and they worked for maybe a quarter to 2 quarters of 2001. And then, again, it was ultimately it was, all fall down. And so, to me, the ultimate goal of any investor, just like any business, is first thing, stay solvent. And second, try to make as much as you can without losing big along the way. So how do you do that in an environment like this? I don't mention the single inverse ETFs. And by the way, the double and the triple levered, I've never done that. It's poison to me. Others may know how to do it anyway. But to me, the looking at the market these days, I have 2 sort of main keys to my portfolio, which really helped us, stay close to the zero line for all of 2022, and then it's still the game plan into 2023, maybe with a little bit more emphasis on the short side, and that is this: one. Don't be afraid to get your free low risk, unless you consider the U.S. government paying you a risk within a year. The T-bills, there's T-bill ETFs, etc. The short and safe, not the credit stuff. Okay, I rail against the short-term bond stuff unless it's treasuries. And then secondly, the inverse ETFs. This is not 100% or 0% game. I actually think that some form of arbitrage, and I don't mean this is not complex. If you think there's some things that may outperform on the upside and you pursue them through stocks, ETFs, whatever, great, but counter it with some broad market hedges. And I think that ETF arbitrage, plus some cash stability, is a great 1-2 punch, come what may, because you can always loosen up the reins if you're wrong. So anyway, that's my 2023 in a nutshell, and I welcome any questions or counters or feedback.
Thanks for that, Rob. Really appreciate it. Let's get uninformed investor. If you're still there, please unmute yourself. Uninformed investor. All right. I don't know if I just lost in the matrix. Michael Kramer, you got a follow up?
So yeah, I wanted to ask you a question specifically. I was looking the other day, and I noticed that healthcare earnings estimates for the sector for this coming year have been dropping, but yet the
With the
sector
guy
has
with the
basically
anal
gone up in a
cavity
straight line.
probe and
It reminds me a lot of the year 2000 when you had that 2001 period where the Dow sort of rallied and held up much better than the S&P and the Nasdaq. But I was curious to know, like, do you think that the move in healthcare right now is really just sort of in some of these Dow proxies, like more of like an end of year safety trade? Like people are just looking somewhere to park money, so they're just putting them in these sort of lower beta names, and this is just an overcrowded trade. And come the new year, everything sort of unravels because it doesn't really make other sense with the sort of the decline that we're seeing in these earnings estimates.
Yeah, Michael, I'll just give it a stab, but I'm going to defer to anyone else on the panel that want to answer this. I think that's right. I think people are parking stuff there on the perception that it's defensive. There's not as much earnings volatility in those, perceived earnings volatility in those names as there are in other parts of the sector or other parts of the market. But I don't know. I don't find it particularly interesting for the reason you cited, which is earnings estimates aren't nothing to write home about. And furthermore, if we get bonds selling off, rates going up, and I'm going to turn to Rob Isbitz on this one, I wouldn't expect that sector to do particularly well. So it's not of interest to me. I know it's exhibited relative strength, but you don't have to dance with all the girls. You don't have to play with every turn of the wheel. And I just don't find it that interesting. Rob, do you have a view particularly on healthcare?
What do they say? Best house in a bad neighborhood. And look, I look at thousands of charts every week. Okay, stocks, ETFs, etc. You can't understand the ETFs unless you know the stocks within them. And when it comes to healthcare, look from a purely technical view. To me, that was kind of one of the last ones standing sector wise. And maybe some of the sub industries as well. I mean, med devices and healthcare providers. Biotech has held up much better than most, and what I mean by that is it's been maybe in a 10% trading range for a while, where everything else has been just kind of falling off. In fact, in the stuff I do for Seeking Alpha. I wrote an article this week which got a lot of good commentary, where I basically sort of created or renamed a chart pattern called the candy cane in honor of the season. And a lot of stocks and sectors look like candy canes. Healthcare a little less so, but like I said, eventually they come for them all. So, and again, this kind of plays right into what I was mentioning a few minutes ago about how look, if you take an arbitrage approach, okay, I mean, look, all year this year, the Dow's outperformed the Nasdaq. If you own 50% Dow and 50% long Dow and 50% short Nasdaq, you had a nice year just on that little piece alone. Similar thing with healthcare. It looks better than most. But that doesn't mean it looks good, because sometimes I go through, thousands of charts in a week, and I can't find a dang one that looks like I would buy it for more than a very short-term trade. I'm not really a day trader. So anyway, that's my take.
Can I just? Oh, I'm sorry, George.
No, Michael, go ahead.
I was just going to say, so I mean, from listening to the two of you, it almost sort of leads to my conclusion, which is possibly that this is just sort of a short-term trade. Maybe some of these guys are just all piling into, because I look
Amen.
at, I can't think of any other reason why you're seeing a flight into that group. I mean, it really, like you're talking about Amgen and Merck and Pfizer. I mean, these companies are exactly going to be, lighting up the growth spectrum next year, and they can't be cheap at this point anymore either. And I would think when for the XBI and biotech, that's just a long duration trade, right? And so, once yields start going up again, that whole sector is just going to get crushed.
Exactly
And
the one I was looking at, Michael. Exactly what I was talking about. So we're spot
yeah,
on. But yeah,
more so than the
yeah.
IBB, which is more, sort of larger cap weighted. XBI is more of the speculative names. And, I'm thinking that like this move in the Dow, we've seen this outperformance is sort of just people looking to go somewhere, and it becomes like the hot momentum trade. And because I mean, you got to think if we're in some sort of stagflationary environment, let's say we're not, let's just say we're in a slow, no growth world. Why would you want to own a staple when, their costs aren't going down, but their revenue growth is still really probably going to slow, right? And you got to think that leads to margin compression. I mean, I'm maybe I overthink it, right? But it's kind of, it really is strange because you have like these one or two sectors that just seem to be holding everything together right now.
Michael, Rob hit the nail on the head when he said it's the best house in a bad neighborhood. I mean, it's sort of, when you're at a basketball game or a football game, you get into the fourth quarter and the crowd starts chanting defense, defense. Okay, it's like, people want to gain exposure to the market, but you're in an environment where you should not be you should minimize the amount of sex, drugs, and rock and roll in your portfolio. and so people hide in this crap. That's why they hide in McDonald's and Caterpillar Tract. I mean, McDonald's is a joke, absolute joke, right? And yeah, it's a good company, but the valuation's insane.
Yeah.
So it's all the same. I think people are just hiding there, and it's just bad value. So it's just of no interest.
Which could go down to just the way that some of these funds sort of are sort of created, right, where they have to hold X percentage stocks and they can't own.
Yeah. Michael,
Well, that's
Michael,
it. That's
yeah, wait,
institutional.
hold on, Rob, Michael. Listen, if you have to own something, what are you going to do? Own Teladoc?
No, you're going to own
Own
Pfizer.
Yeah, exactly, right? So,
Yeah.
so it's not like, oh, I'm bullish in the market, I'm going to go buy Tesla, I'm going to go buy ARK. No, you're going to buy some real company which is quasi defensible, and but it just completely. I mean, if you get to the sort of the incentives, the perverse incentives that exist in managing institutional money, this is what you run into. Rob, I cut you off. You wanted to say something?
Yeah, actually, exactly what you just said. That in the institutional world, and you experience this on the inside, George. I experienced kind of on the outside in the the decades when I was formerly an investment advisor, and they, if your mandate is, hey, be fully invested or be 95 to 99% invested, and you can only choose from a limited number of stocks. This is something that I think a lot of the retail public, we need to catch them up on. I mean, I remember that decades ago. I can't remember the firm, but it's probably a lot of them, and the trust companies, things like that. They basically said, here, you're a portfolio manager. Okay, you got the fancy title. You can buy any 35 of these 50 stocks that you want. You just have to make sure you can buy them. Well, are you a portfolio manager, or are you a button pusher and plug in slots? But you couldn't use cash as a hedge, whether rates were high or low. You certainly couldn't buy put options or short anything. There was no place to hide. And George, I mean, you probably have a better pulse on this than I do, plus a lot of people in the audience. But I'm guessing that hadn't really changed. Not in the mutual fund space, and obviously in the ETF space, it's it's driven automatically. So it kind of goes to this idea that so much money in today's stock market is kind of mandated. It's not. It's price indifferent, right? Has to be invested or has to do what the flows into the S&P index or out of the index do.
100%.
Right.
Hey, George. Hey, George. Can I just jump in real quick because I need to go?
Yeah, go for it.
So I run a strategy that Rob just described exactly. It's S&P 500 stocks only, long only, 100% invested all the time. So it's really good because it forces me to look at the market through the lens of sector relative strength. And those defensive sectors, those are the only places that make sense to be right now. And I can post charts on this. But if you have to be fully invested, it's the only place to be.
Exactly. And Carter, I'll just pile on and say, when you have defensive leadership leading the market, what's that tell you about the market direction going forward? So, 100%.
Carter, ever thought of adding a 1% allocation to S&P, 10%, 15% out of the money put options, just leaving it there? They get you the best of both worlds, no?
So, I mean, basically, George, not to cut anyone off, but so if this is right, like if our theory and hypotheses are right, we should really see this part of the market sort of cave as soon as the new year begins.
Well, Michael, whether it's the turn of the new year or in response to rates going up at an accelerating pace because they are long duration assets, at some point it's going to break. I think the charts will tell us when. Hey,
Yeah.
Rob, I'm going to
Thank you.
trigger. Hey, Rob, I'm going to touche. I'm going to trigger you. I'm going to trigger you, Rob. Hey, Rob, have you ever considered about maybe if you just put a five? I can't do this straight face. I'm playing with you, man. Have you thought about maybe just putting 5% into Bitcoin? I mean, like, Rob, can you afford? I mean, can you afford not to have an allocation to Bitcoin, Rob? Seriously.
Yeah, no, actually, I can very much afford it, especially because now there's an inverse ETF for Bitcoin too. So thank you for reminding me in the audience. By the way, I missed an opportunity here, but now I'm going to take it because you triggered me, so I'm going to trigger back at you, okay, my friend. Here I am following Kramer a few minutes ago, and I'm talking to George, and all I can think about is it was Festivus yesterday, and I'm thinking about one of the classic George Costanza lines from Seinfeld. I don't know if this makes me Jerry or not. But one of his famous lines was, "It's not a lie if you believe it." And I'm thinking that kind of summarizes the first 3 hours of this space, does it not? When you were talking about, the car company that shall not be named.
Yeah, Rob. And by the way, I just want to point out something again. Just look at this room now. Look at the screen and just think about how great this room has been in the last hour. I mean, it started off great. We have Motorhead, but that jackass Weber that came in here, I think he's a fraudster. I think he's a complete troll. And this is just an example of why moderation is so important, why talking about things like the car company that shall not be named or crypto is just a complete freaking waste of time. So I'm glad we got this thing back on track. Before we go any further, I put it up in the nest. First half of this year, we raised $220,000 for World Central Kitchen. They are doing God's work. Um, we do these spaces for no personal benefit. We do them because we share. We got a great community. These are the most valuable, preeminent spaces on Twitter without question. The amount of advice you get for free in these rooms, it's not financial advice, but the amount of people willing to share is phenomenal. We have a high-class first world problem of trying to protect and enhance our net worth here. And honestly, and I've gotten thousands of DMs and tweets from people saying how great these rooms are. I would ask everyone this time of the year to give generously to World Central Kitchen. They're doing God's work. There are people out there who are in a world of hurt, who don't know where their next meal is coming from. And World Central Kitchen, there's a link up there to our page where we can help them. We're up to almost 250 right now. I want to hit 300 by the end of the year. And we keep these rooms free. They're going to stay free. I ask you guys, if anyone in this room thinks they're getting value, you got to. I don't care if you give $10, $100, $1,000, $10,000, but you think about your portfolio and what you spend on research, especially for those that everyone gives according to their means. A $10 gift from a student means as much to me as a $10,000 gift from a well-heeled boomer with a $10 million portfolio. But people spend thousands, tens of thousands of dollars on investment research. It's not asking a lot for somebody to give $100, $1,000, $10,000, if they have means. And again, I repeat what I said: the small contributions mean as much to me as the large ones. I really pride ourselves on the breadth of inclusion that we have here. Last I checked, I think we had 900 people had given. And so I'd ask each and every one of you to please, please, please give to World Central Kitchen. Kind of feel, this is the time of the day when we feel like Jerry Lewis with the telethon. But seriously, together we can do this. I laid off it for a few months. You had a great run in the first half of the year, gave it a rest, but it's time. So I ask everyone to please give in, reach in their pocket and give to WCK. All right, let's go back to where we were. Let's see. We're going to go to Chaos and then Dane. Hey, Chaos, please unmute yourself, Chaos.
Hey, George. Thanks for having the space today. I really appreciate these. And I just want to make a quick comment on, I believe it was Rob that talked about his experience once upon a time having the ability to choose 35 out of a list of 50 stocks or something like that. And I think that reality has gotten a lot worse. I'd say 10 times worse. That a lot of wealth management accounts are, I'd call them glorified asset allocation funds. I mean, you might hold the securities directly, but there's very little customization. And I would say that for the most part, they hug benchmarks to the extreme. And for that reason, an environment like we're in right now, it's it's why you get on the Cartoon Network and you hear people say really superficial things like, well, most sell-offs are X and we did Y, so we think it's almost over soon or whatever. It's just sort of a side effect of a service that has been commoditized and a service that has been converted to a factory of sorts in a lot of cases. I didn't really have anything else to add except maybe that I think that the same institutions that have sort of pushed this to the fore have also gotten very either lazy or reluctant about incorporating macro views that might be operationally inconvenient.
It's a profit motive.
Yeah, appreciate that, Chaos. We've talked about that in these rooms and going on occasion. One of the things that I wanted to do, we haven't done it yet, we will do it. And I think Rob will be part of it, and I think Ken's going to be part of it. And that is, I want to have a room for RIAs, about RIAs and wealth advisors, because it's what you talk about, the profit motive and the fact that incentives aren't aligned. It's highly problematic, and I think the public is being incredibly ill-served. And in part, that helps explain why these these spaces are so good, because people are looking for the truth and in a different answer. And I think they're getting it here. Thanks for that, Chaos. All right, we're going to do two more, and then I'm going to call it a day because we've been running on for too long. Actually, three more. We're going to do Razor, and then Michael, and then Dane. Razor, the floor is yours.
Okay, can you hear me?
We got you.
All right, thanks. So I had a financial planner that did phenomenally well. She obviously, through the bull market, we made a lot of money, probably enough for me. I'm in my 40s, probably to retire. And in January, I called her and I said, hey, it just doesn't, something feels right. Normally history shows we're due for a correction. And she kept telling me, no, I see support. She kept referencing Cathie Wood. And I think she based everything off of her opinions. And so as the years gone on, we had a huge percentage in Tesla. We had a huge percentage in Amazon, as well as a few others. And then I said to her, I'm not feeling good about this. No, Cathie Wood, she's been buying coins. She's been buying Tesla. She's been doing all these things. And so I started researching who's anti-Cathie Wood, because whoever this person is, it doesn't seem to be jiving, which is where I came across you, George. And so it got to the point where, after listening to all these great topics that you guys have talked about, all these great speakers you've had along with yourself, and watching your fund and how it's performed, I took my account back from her and I'm managing it myself now. So I just took that back and basically parted ways with her. And a lot of it has had to do with because of you and everyone that's on these groups here that I listen to every day. So my question is to you and to the group is, I still hold a lot of Tesla, and luckily she bought it in like 2015, 2016. So I'm not in terrible shape, but I've lost, 2/3 at least of what I heavy Cathie Wood type. So do you feel like now's a good time to get out? I haven't lost money on these as far as my cost basis, but I've
Yeah,
gotten
yeah.
crushed on
Yeah, yeah. Razor. Let me
yeah,
answer
go
that.
for it.
I mean, I'm really sorry that you've had a hard time this year. I'm really glad that you made money
Yeah,
previously. But what I'm going to tell you is not financial advice. You have to make your own
of
decision.
course.
But there are a couple things to keep in mind. One is Mr. Market doesn't know and doesn't care what your cost basis is. That's what Peter Lynch always used to say. Mr. Market doesn't know and doesn't care what your cost basis is. If Tesla's going to go down, it doesn't matter whether you're in it at a profit or you're in it at a loss. The decision is the same.
Sure.
Conversely, Tesla's going to go up, same thing. So my own view of Tesla, it's an unmitigated disaster. You know, and ARC, we've been short ARC since, I don't know, 130 or whatever the hell it
Yeah,
is.
I've been watching it. It's
Yeah, Tesla, we called that as a short. My opinion remains unchanged. If you were in the space earlier today, you would have heard Motorhead.
I heard it all. Yeah, it was excellent.
Motorhead. I personally believe, and I'll tweet it out. I think Tesla's going below 50, and I think it's going to happen in the next 6 months. So you do whatever you want. I get
No,
I,
I,
get confused.
I've watched your fund's
No,
performance, George.
well, no,
The
no,
fund speaks for itself too.
Fund's performance is irrelevant. Yeah, I looked like a genius the last couple of weeks. I looked like an idiot the first few weeks I ran the fund. So this is a marathon. It's not a sprint. I mean, whatever. I look like a genius right now, but or General George Patton, call your office. All glory is fleeting. All right.
Yep.
The point is, I'm an investor. I'm not a trader. Although I've been trading a lot lately. A year ago or earlier this year, I get confused with the splits. But when Tesla was a oh god, I get so confused with the numbers now. When it was like 250 or 300, I said it was going to 100 by the end of the year. Well, here we are, it's 122. What's important is not the price target, but rather just give context. It contextualizes the degree of my bearishness. I personally believe Tesla's going down, and it's going down a lot. It's lost its competitive. It has nothing special. It's lost its competitive position. Earnings, they could lose money next year. China is where they make all their money. Competition is coming. The multiple went through the roof. Musk is dishonest. All liquidity driven assets are getting destroyed. This is no worse than the rest. And so, for me, if someone was giving me an account and said, "What are you going to do, George?" I'd sell it right away. And the one thing I would say, I'm glad you took and I'm glad you took the account away from the investment advisor, because look, this is a hard business. But I would just say, as a general proposition, any investment advisor who's giving the same advice to their client today, look, we all make mistakes, but any investment advisor is giving the same advice to the client today as they were giving at the turn of the year. You should run, not walk, as fast as possible from that investment advisor. I mean, I get it. Turn of the year, the sands are shifting, the tides are shifting. It's hard. I get it, right? But the path revealed itself. Anyone who was still saying stay in Tesla, stay in Apple, stay in Netflix, all that garbage, Amazon is what was it? Was it? I can't remember where it was. But hey, Rob, help me here. What was it? Get out of here. Is that Seinfeld? Who's the guy that said it? Get out of here? Right? To that investment advisor, I said, get out of here. Rob, where's that come from?
Oh boy, you got me stumped. Maybe it's your Jersey accent. I'm not
Yeah,
sure, but
Rob, go
I'll
ahead.
just
Go ahead, Rob. Go.
yeah, I'll just say this about Tesla and ARC and all that stuff, okay? And I mean, personally speaking, from this year, but also looking forward. I mean, you want to talk about the holiday season and the gift that keeps on giving. I mean that's it. That's it. Because the best formula that I have found over the years for for something that we're kind of lacking in 2022. Okay, the tough thing about 2022 was that you didn't get a sustained move in anything. But of course, George, you and many others in these spaces have brought up, whether it's the ARC style stocks and the Tesla, of course, probably chiefly among them. The reason these are the gifts that keep on giving is that because you have so much of this sort of arrogant pushback, which always gives you another sort of reprieve to go and up your short or your put option or your inverse ETF or however you play it. And I mean, I just posted a chart to the Nest. Hopefully, I did it correctly. I'm not Mr. Tech, but I mean, it's like worse than an ugly Christmas sweater. It's unreproving, and those are the toughest things to find right now in the market. Something that will actually move in one direction or the other sustainably. Unfortunately, for stocks and maybe for long bonds eventually, okay, it's going the wrong way for a lot of people. And again, that's why I bring up the idea of kind of playing offense and defense at the same time, which is a way to say, don't just wait for the next bull market. Take the market you have, not the one you wish you had.
Yeah, and listen, I really want to wind this from up, so I'm gonna be very brief here. It's a play on Kramer. He always says there's always a bull market somewhere, and my job is to help you find it and make money. Well, the wise guys would think I'm a permit, but I'm not. I would say there's always a bear market somewhere, and my job is to help you make money. So there you go. All right, listen.
Thanks, guys. I appreciate it from the bottom of my heart what you guys are doing.
No worries. We're going to close this from shortly, so I'm going to recognize Dane and then O'Hare. I'm going to ask each of you guys to keep it brief because I've been at this for 3 hours and 20 minutes, and I got to get a life. So Dane, please unmute yourself, and then O'Hare. Dane, the floor is yours.
Hey, George. Thanks so much for putting this on. My question really is about money market funds. I'm curious. I know that during the 2008-2009 crisis that there were some money market funds that got liquidated and broke the buck. And looking at the current market situation and the money market starting to yield 4% and above, what your thoughts are there as far as safety for capital in the current situation, just to make some income while we wait out this downtrend.
So let me interrupt. We're not at least at the point yet where money market funds are an issue. I mean, it could get a lot worse, but right here, right now, given that there isn't much distress in the system and banks are in good shape, I wouldn't really worry about it too much. I would actually go by. I mean, Rob, you probably have the answer to this, but Rob, isn't it better just go buy T-bills and make 475 now or something like that than money market funds?
Yes.
Yeah. Okay. So that's the answer. So Dane, just do that. Just go buy short-term paper, 3-month paper. You get 4 3/4 and be done with it. But if you're gonna keep money in money markets, they're okay. I would listen. Stay tuned. It's a fluid situation. Check back in a few months. Maybe we'll get a credit cycle. Maybe things start blowing up. But right here, right now, I wouldn't worry about it. Thanks for your question. Last but not least, I'm going to give the floor to my good friend O'Hare. Always good to hear from you, O'Hare. Please keep it brief because I want to wind up this room. Thanks, O'Hare. O'Hare, please unmute yourself. Can't hear you.
Oh, sorry. Yeah, sorry about that. Hey, fantastic spaces. I was hopping in and out, kind of listening, getting ready for Christmas Eve here, but really appreciate some of that intel on Tesla. Chanos was in here, some of his perspective. I got to say, George, I've really seen a big change in the way you run your spaces over the last 6 months. So congrats, kind of kudos to you. I think it makes it a lot more pleasurable for all of us because you do add a lot of value. So I'm not like stroking you off here. I really believe that we all get more from these spaces when you have, some of these folks come in and give their 2 cents. So I just wanted to chime in here and let you know that, and wish you guys all a happy Hanukkah, Merry Christmas, Happy Holidays, whatever you guys celebrate. So it's been a tough year for everybody, and I look forward to a good year next year. So for you and for everybody else as well. So anyway, great space, and I look forward to many more next year.
Appreciate the kind words, O'Hare, and I know you and I have had differences, but we're all good, and we all learn, and we all help each other together, and I love you bring a different point of view to things. So,
Absolutely.
Merry Christmas, Happy Hanukkah, everyone. I know we got a few more folks that want to get up here, but guys, I got to get a life. This is going much longer than I wanted.
You got to hit the
And so
beach.
please keep it.
You got to hit the beach, George.
I know. So anyway, guys, listen, this has been great. Don't worry, we're going to do another space. Maybe we'll do one on Monday. Tomorrow's a Christmas. Maybe we'll do it on Monday. Save the questions. The markets aren't going to move between now and Monday, so don't worry. Your questions are as valid today as they are on Monday, so we're good. All right, listen, everyone, this has been awesome. Don't forget World Central Kitchen. Happy holiday, Merry Christmas, Happy Hanukkah. Everyone be safe. Take care. Thanks, everyone. Good night.